in most, and in fact in all G20 economy. And if you go away from the economic measures, you look at investor confidence, it is 15% higher than where it was. It is very high as measured by Ipsos. Tourism is back to where it was before the pandemic. And then you get this amazing technological shifts that are taking place. And you get the green energy and the many innovation, but on AI by itself, it is fueling not only capital markets, but it's fueling optimism. It is creating an opportunity for rebalancing global competitiveness amongst companies, amongst countries, and even amongst families and people who see hope that these technological shifts, if they are backed up by the right ecosystems and infrastructure, will create a greater future. And that's where the confidence comes in. But I think most importantly, it's reflected in the markets. The markets are usually, more often than not, almost consistently, will tell you where we're going. And if you look at the S&P 500, think of this. The last 12 months, it's 40% up. You may say this is US markets fueled by the Magnificent Seven and all the tech hype. Some people have said. But look at the MSCI World Index. Last 12 months, it's up 35%. And the investors, and many of them are here, and we heard the leaders in the various sessions today are not dumb. They would pull out. So there is a lot of, and then there is a lot of dry powder. I think corporates have deleveraged a lot, so they are willing and able and ready to invest. That's what I see day in and day out as a Minister of Investment. PE and VC funds alone have just under $3 trillion of investment ready to deploy. I'd like to, if I may, Becky, just for 1 minute, mention how is that reflected in Saudi Arabia, because that, this is the area where I am closest to, obviously, as a member of this government. Our economy is in the middle of the Middle East, of course. We are the center of the Middle East, and we feel the pain that is happening at the human level. And we see the disruptions in the Red Sea. And some of the audience may ask, how is that reflected on the economic environment and the business environment? And obviously, headwinds will reflect any economy. But thanks to His Royal Highness, thanks to the vision, the tailwinds are much stronger than the headwinds. And the economy of Saudi Arabia under Vision 2030 is navigating these geopolitical and macroeconomic and global challenges, including trade tensions and political conflicts, extremely well. If I just give you some indicators, our GDP has grown by 70% since the vision was launched. If you look at the G20 countries during this period, and despite fluctuations and shocks of different kinds, including oil markets shock, the Saudi economy has been the second fastest growing economy amongst the G20. And I think what is more reassuring for us, proof point that Vision 2030 is working, is that the non-oil economy has been growing at 4 to 5% since 2017, consistently, including this year and last year. If I shift to investment, we have targeted $3.3 trillion of direct investment, what we call gross capital formation. And I'm happy to say that gross capital formation is growing at above 10% year on year. This is total investment. FDI is also ahead of target under the National Investment Strategy. Last year, we recorded $26 billion of FDI. The last 3 years, average, if we average to adjust and normalize for fluctuation, it's 2.5x the 3 years before and about 4x of what it was before Vision 2030. Venture capital is going into innovation, new sectors, our tourism from almost nothing. We recorded last year 100 million tourist visit, and the list goes on that proves that amongst the headline news that you broadcast in CNN every day, the rest of us who are running economies are focused on building prosperity, creating a future, creating jobs, and our companies are profitable and making money. Foreign investors in Saudi Arabia are voting both with their feet and with their money, as I mentioned with FDI, but the number of licensed international companies is 10x of what it used to be before the vision.
I know you're teasing me, and you know that we applaud the success as well as report on the challenges, sir. To sustain this ambition in what is, a different growth dynamic than we've had over the past couple of decades, I think it's important to talk about policy priorities. And I think the competitive edge, as you will, I'm sure, point out here, is the agility that you have, the opportunity that you have in a country like Saudi to really look at the landscape and say, how do we make ourselves more resilient? How do we sustain our numbers and grow this economy with a policy sort of framework that can, to a certain extent, move quicker than in many other parts of the world? And I'm interested to get your reflections on that as we move through this session, but thank you for the time being. I want to bring in the others. This is a bit of a rapid fire, if you will, so just through your own lenses, before we drill down on your own individual files, as it were. You've listened to His Excellency. We've heard, to a certain extent, the wider story and then the prism through the Kingdom of Saudi Arabia. To each of you, how concerned are you about the geopolitical and economic realities today? Very briefly, sir.
Well, we are concerned about the risk of escalation of the ongoing conflicts, even though I think the risk is small, but it's not completely ignorable. Typically, that would be the worst case scenario because Turkey is a highly diversified economy. We tend to benefit from a more stable and prosperous region, so conflicts don't help. And they tend to have negative impact through energy channel, through trade channel. So clearly that would be one risk. The second risk is, of course, US elections matter in terms of whether we get a more fragmented global backdrop or not. It looks like, maybe it's a base case scenario that more trade fragmentation could be in the pipeline. The good news is we have free trade agreements with about 54 countries around the world, and that covers about 60% of our trade. So fragmentation is a real risk, but we also tend to benefit from nearshoring and friendshoring. So even though that's a risk, I think we are more resilient to that risk.
Thank you, and I'll come back to the Turkey story very specifically momentarily. Douglas Alexander.
Well, in Europe at the start of the 20th century, war was followed by pandemic. At the start of the 21st, pandemic has been followed by war. So it's a challenging geopolitical environment. Really for the last 40 years, for the first 40 years of globalization, most CEOs and capital allocators didn't have to give much consideration to geopolitics and could instead focus on ensuring flows of capital, services, goods, and people at ever higher velocity around the world. And I think what we've seen in recent years is politics making a comeback. Politics domestically and geopolitics internationally. Whether that's a coincidence of economic anger, cultural anxiety, and political alienation at home, or whether it's the significant challenges to the international order that we've seen. So as I look ahead, as you've said, both the IMF and the World Bank have been pretty anemic in their predictions in terms of global growth. Many analysts are asking about surely the most consequential global relationship between the US and China as we look ahead to the next week's presidential election. The analysts ask if the hard decoupling from Russia is going to be followed by a soft decoupling from China. I think it's important to recognize just how interdependent those two global economic powers remain. And in that sense, as in the challenge of interdependence, we are fated to live together, and we have to find effective ways of ensuring the global trading system maintains its dynamism. It was back in 1963 that John F. Kennedy said, "A rising tide lifts all boats." I think we've learned that that is, if you like, an ambition rather than an achievement, but it's an ambition that I sense policymakers around the world are determined to try and realize.
Thank you. Ray, you have identified 5 trends shaping global affairs: debt money and the economic cycle, internal order and disorder, great power conflicts, namely the relationship between the US and China, acts of nature and technology. You sit sort of, those key trends sit very sort of squarely in this conversation that we are having here. So how concerned are you?
The world order is changing in profound ways. And in order to understand rises and declines of reserve currencies and countries, I studied the last 500 years, and I'm a practical decision maker, so I do it for betting on what's going to happen now. And in that context, there are these 5 big forces, which are, there's the debt money, reserve currency question of the dominant empire. That's a big issue. We have a lot of debt, and that debt will be a problem as we're evolving. The second influence is the internal peace and conflict, and we're seeing threat to democracies, some of these democracies, in which there's a disorder, but it varies from country to country. I should say that the important thing is to understand the distinctions. So for example, this is one of the things that makes different regions attractive. So second force is internal order and disorder. Do you work together, or do you have irreconcilable differences? I think that's a force. Third force is, of course, the changing world order, the great power conflicts and so on, in an environment where leadership or dominance of the dominant power and the dominant reserve currency will not be the same. Fourth influence throughout time, these are all the big influences through history, is acts of nature, droughts, floods, and pandemics. And so that force is, of course, a dominant force, particularly important force. These forces interact, and then the fifth force is technology. And we know that we're going to have a technology revolution. So we're going to go through a time warp. The thing that I want to emphasize is that that's very different from which location you are in. One of the great things, the reason I'm weaving my life and my family's involvement in terms of family office and so on into the GCC is that it is one of those places, particularly Saudi and the UAE, are places in which you have the basic fundamentals. I would say the most important thing when looking at different locations is, first, the financial. Do you earn more money than you spend? So do you have a good income statement and balance sheet? Second, do you have internal order in which, rather than conflict, you have good leadership and management? I think His Royal Highness is a great leader who has, he's almost like a Deng Xiaoping of China, in a sense, or a Lee Kuan Yew. And then number 3 is this world order problem. And that is a challenge for everybody, but I think they have the ability to do that. Number 4, climate, of course, and then technology, which I think is dominant. So I think you have to look at the differences, the conflicts, the differences in places. And then to invest, you have to diversify well within that context.
And you are reminding us that none of this is new, actually. You know, these are forces that have been, you know, around for a very long time. Were we to read our history books as well as you do, perhaps we would be less unsettled by what are unprecedented times. Magda, let me bring you in, because Ray identifies debt as one of the key drivers, key trends that he sees now and in legacy terms. The debt picture for emerging markets and developing economies is a real downside risk to progress. The debt picture for developed countries around the world is also pretty worrying at present. How concerned are you? And then we're sticking with the concern and the caution at this point, because I want to flip this on its head and talk about how we create some optimism and how policy making might provide some hope with a healthy dose of realism going forward. I just want to stop there, because this is very much your file when it comes to the work that you do. How concerned are you about current crisis?
No, thank you, Becky. I want to come back to what have been said about the uncertainty. Debt issues have to be solved with growth in countries, and growth is often related in emerging countries with trade. So trade fragmentation has an impact on growth and on debt issues that countries are facing. So for me, the number one risk currently is trade issues. That fragmentation that you have is excluding a lot of emerging countries, or low-income countries, from the supply chain. This is a huge risk. Secondly, I think that on technology, the decoupling that we are having on technology and the divide, the growing divide that we have with AI, will create a two-speed growth in the world, and a risk of increasing that dependencies of low-income countries, low-income countries to more advanced economies. I'm very concerned also about the concentration that you have on technology and on market linked to AI. Because as we go, we will see that less and less countries have the data that will allow them to be able to run models on AI and all the elements around the system. Third, all this is reflected on something that we don't talk about, is migration. If you talk about the politics of each of these countries, migration is becoming a central theme in the conversation. So it doesn't allow a good movement of people, but also will raise some tensions that we will need to deal with as we go. And if we don't solve the issue of debt, of growth, this tension will be exacerbated and will be increasing the uncertainties that has been highlighted earlier. So I do think that as we discuss these issues, we need to talk about the distributional impact of growth policies, which for me would be a central theme of the new rebound that people need to have if they want to have the sustainability. And it's not an issue only of emerging economies. It's an issue of emerging economies, of developed countries, and this is issues that are shared by all countries. So addressing the issue of debt in emerging countries will require also addressing some of the social issues that we have seeing emerging now on consolidating.
And we're going to come back to some of the policy priorities, and perhaps you've got some advice for some of our ministers here about where you would like to see certain priorities. Let me go back down this board, as it were. Ray, I'm going to come back to you. I'm going to start, though, with you, Douglas Alexander. You're in your first 100 days in office under the UK's new Labour government. Tomorrow you'll announce the first budget. The IMF sees the UK economy as quite positive at present. I mean, both the US and the UK, they're identified in their latest report as actually quite positive growth stories. The UK economy set to accelerate and is backing the acceleration of public investment as being positive for growth. Now, that is important, particularly when you consider the Brexit critics who are and continue to suggest that Britain is stuck in the slow lane for years to come. For the benefit of this audience who may not be as imbued in the sort of, you know, what's forthcoming in the budget, Rachel Reeves spoke at the IMF the other day, so I think there's some stuff that you can actually talk to here. Debt rules and change to fiscal policy, a clear change to fiscal policy. Can you just briefly explain how you believe policy, fiscal policy and a change to debt rules might, or I'm sure you hope, accelerate the growth picture for the UK?
Of course. I'll say a word on the politics and then I'll answer your question on the economics. 14 weeks ago, we saw a pretty seismic change in the United Kingdom with the election of a Labour government. We've been in office for 14 weeks after 14 years of Conservative government. And as we've heard from the other panellists, we're in a world where there is a premium on the effectiveness of your government. And truthfully, with the decisions that were taken in relation to Brexit, the referendum that we had on whether Scotland should secede from the United Kingdom, the central question of British politics in the last decade moved away from economics and became culture and belonging. Are we Scottish or are we British? Are we British or are we also European? So I welcome the fact that in the UK, partly under the weight of the cost of living challenges, the inflation challenges we've heard about, economics has made a comeback. So what we've seen in the last 14 weeks is a Labour government with a significant working majority. That matters because arguably we are now the most politically stable of any G7 economy. And while political stability does not guarantee economic stability, it certainly helps. And we've experienced a high level of volatility in the UK in recent years. So the first thing I would say is, ahead of Rachel's budget tomorrow, Britain is back and we're open for business. What is our thinking as to how to stimulate that growth? Firstly, we need to repair a fiscally impaired balance sheet for the United Kingdom. So there will be steps that we will take in the budget tomorrow to give fiscal stability and more broadly financial stability to the United Kingdom. Our mantra, if you like, is stability, investment and reform. So as well as the moves that will be taken on fiscal policy yesterday, we had our own International Investment Summit in the UK just a couple of weeks ago, securing more than £60 billion worth of new investments. And at the same time, we've got an ambitious agenda, as we'll talk about on this panel, in relation to the use of digitization and AI in our public services. So stability, investment and reform is the mantra. We've got an active industrial policy, an active trade policy, and in that sense, we're broadly confident that the judgment we heard from the IMF and the World Bank at the spring meetings will be vindicated by a strong pro-growth agenda tomorrow.
And you genuinely believe that you can avoid the risk of we're talking about migration, I'm talking about people leaving the UK at this point. I mean, there's been a real reputational damage done to the United Kingdom, and even cabinet ministers from this current Labour government are saying, and Wes Streeting said, we're stuck in the slow lane as far as growth is concerned. So you know, that must worry you, and there must be a perceptual risk. You know,
So I first served in the cabinet of Tony Blair, and when he was asked what his priorities were, he said, education, education, education. I can assure this audience that our priorities for the UK economy, growth, growth, growth. We have a government-wide commitment to driving forward and raising the trend rate of growth of the UK economy. And critically, if you look at where the UK has been in recent years, we simply have not invested sufficiently in our capital stock. And we cannot do that by public investment alone. We need also the capital markets to see the UK as a stable, attractive location for inward investment. And that's why we're at events like this today.
And we are going to get onto sort of AI, advanced technology and innovation, and the opportunities that those provide, the concerns that people have and how policy might help skew, you know, us down an optimistic future for technology momentarily. Minister Shimshek, let me just come to you, because you were appointed Finance Minister last year to invoke an economic turnaround, which has meant reversing a policy experiment promoted by your president, which who is a self-declared enemy of interest rates. Now, 2 years on, we've seen the impact of higher interest rates on inflation around the world. Rates in your country have been hiked from 8.5% to 50%, bringing inflation down from 75% to 52% in August. There's a whole load of numbers in there. My point is that is progress, but against the kind of run of what is happening around the world, there is still an awful lot of work to do. And Turkey's cost of living crisis is, of course, well documented. How challenging is it going to be to keep inflation down whilst balancing economic growth? And what are your sort of key priorities?
Well, thank you. The worst is behind us. Inflation is falling. I think it will continue to fall because monetary policy is tight. Fiscal policy will tighten further. Incomes policy is going to be more supportive. We've already addressed external vulnerabilities. Current account deficit has been on the mend. The deficit is down to 1/6 of what it was a year and a half ago. And reserves are up by over $100 billion US. So I think now it's time to make these gains durable. And that requires structural change. Clearly includes green transition, digital transformation. We have a very broad reform agenda, and we're beginning to deliver on that. So while last few years have been complicated, challenging.
That's an understatement.
But I think if you look at the journey so far, the program is on track. It is delivering. This is a sizable economy. Referring to raise criteria, one advantage we have is that debt to GDP ratio is only 26% in Turkey. So we have a very low debt to GDP ratio. Working age population growth is still there. We don't really have growth problems. So temporarily, we may have to go on a short-term diet. But if you look at the last 100 years, growth has been close to 5%. Last 20 plus years, close to 5.5%, 6%. So we don't have a growth issue. It's just a matter of addressing some of the structural, impediments, such as attaining price stability, which is now our top policy priority.
A lot of talk about the shifting landscape, a lot of talk about why we should be concerned. There should be a healthy dose of concern as policy is organised. But let's ensure that we inject a real note of optimism in this conversation. Artificial intelligence and advanced technologies are being hailed as the next industrial revolution. They are here, we are seeing it, we are living it. We are all, to a certain extent, I think at the beginning of our AI journey, many of us, I'm sure there are some people in the room here who are complete experts, and I've met a number of people who are doing extraordinary things with AI and advanced technologies, but many of us are on at the beginning of our journey. And many of us have concerns about what policy frameworks will look like, what regulatory frameworks will look like in order to ensure that we use this transformative tech for good and for progress. Minister, where do you start? With regards policy, and let's keep this, because I've been told this is the board of policymakers. Let's be very, very focused here. I talked about the opportunity that you have here and countries around this region have for agility in policy making. AI and advanced tech necessitates new policy frameworks, new regulatory frameworks, new guardrails, new safety environments for us. What are you doing to ensure that the investment here in this advanced technology is going to work for all of us, for the good of society, but also for progress?
Well, there are two sides to the issue. One is enabling the uptake, the use, the demand of AI, and some of it, there are known unknowns and there are unknown unknowns, as you alluded to. So I think we're all in a discovery mode. But what we're doing in Saudi Arabia is having balanced framework on data privacy, data sovereignty and data security, but shifting more towards enablement of the applications of AI. And you see it today in healthcare. We have the world's largest virtual health care facility. Saha is our virtual hospital. They just won the Guinness Book of Records, and the Kingdom is integrating our virtual digital health facility with a global network that we want to also extend it to people who cannot reach a healthcare facility. But that is going to, think diagnostics, think translation, getting patients who don't speak the same language using AI algorithms that will give them think of emergency cases when people still don't have an ambulance. So all of that is going to be enabled, and Saudi Arabia is leaning forward on more risky, if you want to call it. The same thing with drug discovery and some of the great things. And conservatively in the Middle East, and I think it's too conservative, PwC estimated that the market will quickly, incrementally in digital, will grow up by $26 billion on the demand. So there is a huge demand here. But I think what I want to focus on and what will be announced throughout this conference this week is Saudi Arabia is going to be the disruptor. It's going to be, the maker of a different ecosystem for actually incubating AI algorithms, the LLMs, in data centers that will have everything they need. Energy, I think, has been mentioned all day about the critical factor. The kingdom's cost of energy has been, it's World Bank publication that says 50% lower than our peers in the G20. We're about less than 20% of that of Europe. We're significantly more than the US, definitely in the Far East. Land is abundant and is prioritized to be allocated. Construction cost is competitive. So and capital is being allocated with a priority by the PIF and other private sector companies that are building AI data centers as we speak, together with international investors that come to our ministry and they get their license and permit and create their joint ventures or do it on their own, 100% foreign-owned data centers within days and weeks. We don't need years to do this. So speed and agility, as you mentioned, throughout the investment ecosystem is critical in today's world, and it is being deployed at AI.
And there's a real competitive edge here. I mean, there's no doubt about that when it comes to that speed and agility within the sort of, policy spectrum. Matt, I'm going to keep it as tight as possible because we've about 4 minutes left. You gave me the sense that you think AI and new technologies are exacerbating already existing digital divides between the North and global South. Just a 60-second soundbite, if you will. How do you think that can change?
What is happening in Turkey, what is happening in Saudi Arabia is part of the solution. Because the risk that you have today is to have algorithms which are trained and developed and have a concentration on the foundational models. And that will be very dangerous because you will create herding in the financial market, in other sectors. So the fact that right now we have diversity in the source of producing foundation models in AI will be extremely important. And I really commend what Saudi Arabia and Turkey and other countries are doing. Secondly, source of data. Today, a lot of the AI models are run by synthetic data. It means they are not real data. So more we expand the data centers in part of the world where you have a fast growing population, so more you will be able to use real data to be able to run the model and train the model. That will be giving us more accurate solution. The third element for me, which is also important, we didn't talk about it, is genomics. In the health solutions today, most of the genetic pool used for medicine precision solutions are coming from Caucasian groups. And to diversifying today the source of genomics, we change radically the solutions that are provided in solutions. So I think I see opportunities, but I think that opportunities and risk, but these risks are being addressed if we bring more of the emerging countries in that space.
Douglas Alexander, AI, how do you ensure that the rewards outweigh the risks?
So countries and companies need not misread the environment, otherwise they fail. So first of all, how big is this? AI in 2024 is like the internet in 1999. It is about to change absolutely everything. It was a fellow Scotsman, James Watt, who invented the steam engine. Reid Hoffman calls AI the steam engine of the mind. So it's got a huge role to play in raising productivity and thereby raising growth in OECD and other markets. But it's an unusual public policy challenge. Normally, politicians know where they want to go, but are unsure how to build consent to get there. My sense is global policymakers genuinely want to get this right, but aren't entirely sure it's the regulatory destination. So in the UK, we hosted the Bletchley Park Conference, the first global summit on AI. We've got a huge responsibility to build on that work. We've had about $22 billion worth of investment in AI over the last 10 years in the UK. So we're going to have a big focus not just on the regulatory piece, but also the adaptation and enablement piece. And we're very confident that AI is going to be the next big story in terms of productivity.
Ray.
AI?
Technology.
For the last, I don't know, 30 years, I've been systemizing the decision-making, computer decision-making. I've been using AI. I think that this is the greatest revolution because it applies to all thought. So it's better than the Industrial Revolution, steam engines, and all of those things. This is going to be revolutionary, but I think that it will have to work in not just the it has to work in the areas that you're operating in, the applications, the verticals. And I think that that's where the value is, the usage of it. And I think that AI is not yet, for most people, a good decision maker. And it should be a good decision maker. That when you embed your criteria and then you use it as a partner, a thought partner, so that you can make decisions in that way, it's going to be fantastic, but it's fantastic anyway. So everybody must be using it and learning from each other to make it practical.
Digital assistant rather than the master, though, I would hope.
Partner.
Yeah.
A partner.
Yeah, a partner, a digital partner. Thank you. I'm going to leave you with the last word, sir, if I can. We've covered the cause for caution. We have certainly covered the opportunities, a sense of optimism. And when you live in this region, as I do and have done for more than a decade, there is a real benefit to an optimistic outlook, optimistic decisions being made that help us all ride the crest of a sort of future-facing outlook. I want you just to use the final 30 seconds to deliver your vision for Saudi Arabia in an optimistic, through an optimistic lens.
Well, let me just make sure it's clear. Optimism doesn't mean complacency about risk management. And the kingdom has everything you can imagine in terms of managing all kinds of risk, security risk, cybersecurity risk, and what have you, and economic risk, including fiscal and monetary, which is displayed in our policy known to all, which has allowed us to navigate through all of the shocks and headwinds we have faced. But I would just like to say that the kingdom ticks all of the boxes that many of my colleagues have talked about: political stability, economic stability, fiscal stability, monetary stability, a young population, a country that is open. About a third of our population are international residents that call Saudi Arabia home, and they're powering economy. So we don't have an immigration phobia or problem, and the kingdom is the melting pot. Our investors, as I mentioned, have voted with their feet and with their money, and they're pouring in. I want to end by saying investors are not only coming to Saudi Arabia for our sizable, growing, vibrant market. They're coming to Saudi Arabia to address the world and certainly the broader region, and we have initiated a program called the Regional Headquarter Program. Our target was 500 regional headquarters by 2030. I'm glad to announce for the first time that we've reached 540 by this morning. Some of them are the major multinational companies that are with us today, and they will be individually announcing their RHQ. This is an opportunity for companies to come and partner with us, address the challenges that are real, that we want to address but also turn many of them into opportunities. Thank you, Becky.
Thank you very much indeed. It's been a pleasure being the secretary of this board, your board of policymakers, ladies and gentlemen. Thank you.
Saudi Arabia is a leading global business hub, a leading G20 nation, a thriving destination for brilliant minds backed by a strong education ecosystem, and the Middle East's top economy, at the crossroads of Europe, Asia and Africa, and at the centre of a cultural and entertainment renaissance. We're expanding infrastructure and transportation at a speed no others can match. The Regional Headquarters Programme helps multinational companies use Saudi Arabia as the hub for regional operations. More than 500 leading global firms, exceeding the 2030 target, have realised that now is the time to harness the unparalleled business opportunity. The Regional Headquarters Programme, your head start to regional success.
What a fascinating morning. Thank you very much for joining us for the first half of FII Day 1. Please make your way to the pavilion or the dome, where lunch will be served. Programming will resume here in the plenary hall at 1:45 p.m. sharp.
Welcome back, everybody. Hope you were able to stretch your legs, get fed, get watered, and are ready for the afternoon session of day one of FII. Just a reminder, as our next session is about to begin, if I can ask you to kindly take your seats and remember to put your mobile devices on silent, just as a courtesy to all the other participants. And then I'll ask you to welcome back on stage, Jumana Berseche.
Delighted to be back here again. Well, the title of our next panel is about the global economy and whether the global economy is headed towards a soft landing. I'm very privileged to be here because we're going to have a fascinating discussion. And just to give you a little bit of context, the IMF released their World Economic Outlook report last week. They see 3.2% global growth in 2024 and 2025, though some low-income developing countries have been subject to large downgrades. But the IMF described this type of growth as stable and underwhelming. I would say it's pretty resilient, given a couple of years ago we were talking about inflation, global inflation levels of more than 8%. We're now sitting at global inflation levels trending back towards around 3% by the end of next year. Central banks have been fighting inflation, and yet the world economy has remained resilient. Or has it? That is what we're going to be exploring on our panel today. So let me introduce our panelists, starting with His Excellency Mohammed Al-Tawajdi, the Vice Chairman of the National Development Fund. A pleasure to have you with us. To his left, Andrea Esteves, the Chairman and Senior Partner at BTG Pactual. To his left, we've got Jean Hines, Senior Managing Director and CEO of Wellington. To her left, we have Bernard Mensah, the President of International at Bank of America. And then to his left, we have C.S. Venkatakrishnan, the Group CEO of Barclays. So plenty to discuss here. And I gave a little setup about what the IMF are predicting in terms of global growth. I also didn't mention some of the challenges, and some of the challenges that have come up in the discussions this morning include those around conflict, geo-economic fragmentation, tariffs, protectionist policies, climate-related shocks, and even financial market volatility. So, Your Excellency, I'd like to start with you. How do you see the state of the global economy right now, and what sort of ramifications are you seeing on the kingdom's economy based on some of the signs that you're getting from abroad?
So thank you, Jumana. Thank you, everyone, for attending this. Thank you for the audience. We're talking about a soft landing, hard landing, and I'd like to go back to my aviation days, and I'd like to see gauges. So we will land somehow, somewhere, but there are so many gauges that tell us what's going on. The biggest radar is the geopolitics, and it's everything that's taking place globally, whether it's China, Taiwan, Russia, Ukraine, Middle East, Sudan, etc. And this is very important because it's related to pricing risk, and it's related to volatility, and it's related to FDI and everything else. And the second one is where the inflation is heading. I know there's been a lot of interest rates moves. It is heading toward the target rate. Here in the kingdom, it's there. It's already, the target is around 2%. But the inflation picture is still a little bit uncertain. I also look at demographics globally, and there is a shrinking population globally. It's visible in Europe, it's visible in China. But this is also going to determine how things are heading. Environment debate, and the environment is very important. Whether there will be a recession or not, there is a probability now, which is 20% roughly. So all the radars are telling us that this is unprecedented, it's very uncertain, it's very difficult. We will be watching closely how the Fed is dealing with this in the next few months. Here in the kingdom, we embarked in this very impressive transformation journey. We've built the institutions, we've built the infrastructure, we've built the engagement with the investor to be able to basically navigate through this. So whatever the outcome of the global economy, I think we're hopefully well equipped to be able to navigate through this. One of the institutions we've built 6 years ago is the National Development Fund. It's basically private sector enablement and absorbing shocks.
Yeah.
Thank you.
Venkat, I'd like to turn to you now, actually, because I'm going to go back to these IMF numbers. It's strategic because they came out a week ago, so well-placed timing. The US is seen growing at around 2.2% next year. If you compare that to Europe, Germany this year basically not growing around 0%. At best, Eurozone economy is growing around 1% next year. It really feels like in the context of advanced economies right now, the US actually is a relative bright spot. Do you concur?
Absolutely. I think the US has shown over the entire period post-COVID, not just impressive growth, impressive inflation control, and impressive employment gains. So, you know, if you come back, Your Excellency, to the hard landing, soft landing, I don't know exactly how it will be, but if you took it 2 years ago and you said that we'd bring inflation into control the way in which we have had positive growth, even though it's close to zero in Germany, maybe 1% in the UK, and higher than a couple of percent in the US. And so you've had inflation control, strong employment, and interest rates coming back down to the, into the softer, I mean, to the cutting part of the cycle. We would all have been very happy. And I think that's the thing which we should take comfort in, along with what has been a healthy stock market in that period, maybe with a few concentrated names doing well, but overall health.
Bernard, can I just ask you as well from an international standpoint, the Fed have just started the easing cycle, but other central banks around the world in advanced economies have also started with the easing cycle as well. Do you think that that is actually going to provide a growth push? Is it going to provide a stimulus to growth as you look ahead into next year?
Thanks, and good to have me here. Yes, the Europeans cut as well. I think the impetus in Japan is slightly less, we'll see, just given the new government coming through. I think all of these things are a good thing. In themselves, I'm not sure if they're a real growth catalyst. I think the economy is resilient. In the US, we see 60, 70 million consumer customers in our accounts at B of A, and their balance sheets are still healthy compared to pre-COVID. So I think that the US consumer is there. I think China has very specific issues around just where its economy is, and we can talk about that later. India seems to have decent momentum still. So I think that the central banks are trying to manage for inflation. Some of them are still trying to shrink their balance sheets from the expansion of the balance sheets pre-COVID and trying to manage to that. I'm one of those that thinks that there should be more of a fiscal and other impetus alongside the central banks to drive growth.
Let me just ask you, since you brought up China, China recently announced a fiscal stimulus, and China's recovery has been slower than many people thought. Do you think China are going to be successful at stimulating demand ultimately?
They've generally done a very good job in the past, and it feels like they've bitten the bullet on sort of, I'd say, supply side incentives and setting up various support structures for local government, for some of the banks, for parts of the real estate sector. I tend to have confidence in the ability to manage that. One of the things that the market is, the jury's out a little bit, and I think the reason the jury was out is the market was looking for consumer incentives as well, and policies that would help the consumer maybe lower its savings rate and drive a more consumption-led part of the recovery. And the big debate is, you know, whether the export-led, investment-led part of the economy is something that will sustain it through the next period of time. So we'll see, but there's certainly focus on it at the moment.
Well, Jean, I know that you tend to take a more bottom-up approach because you're analyzing companies' margins, profitability, and if you look at the stock markets, many people say stock markets don't necessarily reflect the real economy, but stock markets have been going from strength to strength in the US, and specifically led by a basket of stocks, those Magnificent Seven. There's a lot of hype, obviously, around those specific names, the possibilities offered by AI. How do you see the potential? And also, when in the context of growth, is what's happening within the AI space a secular story, separate to macro?
Yeah, one of the most interesting things when you look at the stock market and the earnings and where it's coming from, even though the markets are very concentrated, and they are very concentrated relative to history, they've begun to broaden out, is that the earnings and cash flow margins of those match. So it's not a mismatch based on the current earnings and cash flow of those companies. They're doing remarkably good companies. I think the other part, and I'm going to focus on the US now, that's quite interesting is that with interest rates up where they have been in the last couple of years, you have just very high borrowing for small and mid-cap companies. And the US is made up of small and mid-cap companies. Of course, we have some big companies, but the beauty of the US economy is all the small and mid-cap companies. So that has really dampened the growth of that part of the sector. And so I think what's most interesting now, and I just read a statistic in the last week or so that small and mid-cap companies' earnings are down 20% over this period. And so what will be really interesting is as interest rates have begun to come down, and if they continue to come down, will you begin to see higher growth in a broader part of the economy, and then you will see a broadening out of the markets.
What do you think which are the sectors specifically that are going to be driving that growth then?
Well, well, one of the things, I'll answer that in two parts. One is that if you have lower interest rates, it should impact many types of sectors, both from a fundamental perspective and both from a fundamental perspective. If companies can borrow at lower rates, they're going to have higher investment, and that will lead to growth. That's across the economy. And then you have a subset of sectors, such as biotech, something close to my heart, that is also driven, their earnings are so far out that you discount them. When you discount them at really high rates, the valuations of those companies will be lower. And I'll tell you an interesting statistic. I followed biotech for 30 years. Interest rates never were a part of the valuation until very recently. The ultimate value is whether they have new medicines and whether they change the standard of care of medicine. But in this period of time, you have these high growth stocks that you have to discount. And then maybe finally what I will say, if you look at AI, the promise of AI, those very high, well-deserved multiples now and the cash flows related to that will only sustain if AI is used broadly in the economy. And so that's, I think we're optimistic about AI and the potential, but I think in order to sustain that, it will have to broaden out. Almost every company, all of our organizations will really have to adopt AI at a rate that will justify all that. Yeah. And so that would give me confidence that sort of the next leg of very interesting AI will come from companies all over the world.
Yeah. Well, Andre, I was in Brazil last week, and it was good to be there. And one thing that I did notice is that the Brazilian economy has actually also been upgraded. It's doing quite well, but then equally, there's a fiscally loose policy over there. And I do wonder, when you look at the drivers of growth the last few years, and certainly over the COVID years, fiscal spending came up a lot. But it feels now that we're getting to a point where people are getting a bit nervous about the size of public spending. Only last week, France, as credit was put on negative outlook. People are getting more concerned about the size of US deficits. Do you think that fiscal spending and the size of government's deficits are going to become an issue next year?
Yes, it will be. That's my feeling. We discussed about that in Bloomberg last week in Brazil. I think it's the whole spectrum of discussion, right? We started this year thinking that Fed would cut rates in March, and 7 other Fed cuts in the yield curve priced. We arrived in March, there was no Fed cut. And gradually, in the following weeks, all the other cuts were moved out of the yield curve. By mid-year, we had a view that no more cuts, eventually cuts in 25. And then a few more weeks, and we were afraid of interest rates hike again. And then a few more weeks, we forgot this idea, and we were worried about growth. In a few more weeks, we were really worried about growth, expecting that we were very close to a recession, and we needed an emergency cut from the Fed in an intermeeting meeting, something like that. But then a few weeks, we calmed down and finally got the September 50 bips cut. And 1 week after that, many Fed speakers came and said, well, eventually we need to reduce pace, or eventually even stop a little bit to see. And too much uncertainty, in my view. And part of that caused by even central bankers. I think central bankers are over-guiding markets. And with that, we are missing a very important piece of information, which is the market price. Markets are being overguided, and we are missing the intelligence of price. Because today, the asymmetry of information from central banks and the markets are very small. And I think we need to rethink our central banking and try to use more what market is telling us. And something that market is telling us is that deficit is getting to a size that is not acceptable. What caused my attention, looking as an analyst from abroad, is the discussion about deficit in the US electoral campaign, or better saying, the lack of discussion about deficit in the US campaign. And even if you are the owner of the printer, there is a limit to print, right? And when you look the long-dated Fed treasuries, you see US TIPS, or the inflation-linked bonds, trading around 2% for more than 1 year. And if you read any monetary policy serious academic work, nobody thinks that this is the neutral rates in US. It's something around 50 bips, maybe 100, never 200.
Yeah.
So these should be, I think, information for us, evidence of information that deficit is entering the radar of the markets in price. And I think it will get more serious and more serious if we don't take action.
Venkat, I saw you were nodding your head over there. So let me just ask you whether you think clients are actually getting nervous about the size specifically of the US deficit in years to come.
So I agree with what Andres said, and I would tell you that we had our second quarter earnings on the 1st of August, the day after the Fed did not move and the day before the Bank of England moved. It's a wrong time to have earnings. But you know, and he's right, because of the information asymmetry that was there. I do think deficits are important. Now, the US has a reserve currency, and that gives them a lot of freedom. And they can go further than most countries can because the dollar is the reserve currency. At the same time, I think it's really important for countries to be able to fund themselves and grow. And the case is the deficit is an important thing, but how you're going to use your money is also important. Tomorrow, there's a budget in the United Kingdom where we are based. There is going to be a need to fund long-term infrastructure growth. People who've been to London would agree with that. And it's going to be important for the UK government, whatever they decide to borrow, and the sterling is not a reserve currency, to make the case, which I think they will compellingly, that it is about growth. But that burden of proof is much higher than it used to be, and that's, I think, the important piece.
And there certainly was an incident a couple of years ago where the budget wasn't received that well by markets. Speaking about long-term infrastructure growth, Your Excellency, I would like to ask you, given the dynamics of the global economy and the fact that some signals of demand have disappointed to the downside, that's also had an impact on commodities, the price of oil, and you look at the vision, the Saudi 2030 vision, and it feels as though there has been somewhat of a reprioritization that's taken place over the course of the last year. I'm curious to hear how that impacts the work that NDF is doing on the ground in terms of your prioritization of projects right now.
So that's absolutely true. The NDF was created to make sure that the SME sector in particular is strong, enabled, funded, because we understand that from an FDI point of view, investors like to see a strong infrastructure and a strong SME. So this journey has been 7 years now. We've created 6 new funds. And the whole idea is not to think only about growth, but to think about impact. So the reprioritization you're talking about is linked to this. What is it that makes sense for the Kingdom of Saudi Arabia to navigate through everything that's taken place? How do we create more jobs and make sure that the economic growth we're looking at, non-oil, is sustainable? So yes, we're looking at this, we're modeling it, we do a lot of stress testing, part of the whole Vision 2030. We're complementing in many ways what the PIF is doing. So for example, if we're opening up all these giga projects, we need to think who's gonna operate them, who's gonna maintain them, who's gonna basically service them. So this is the NDF come in play to basically navigate through this.
Yeah. Bernard, I had a look at the Bank of America Global Fund Survey. It's always a good piece of research to get in your inbox every week. And this week, they were citing the 3 top tail risks as geopolitics, inflation, and US recession. It's interesting that tail risks, geopolitics is falling within the bucket of tail risks. But what is your sense for how geopolitical risks are being accounted for and factored in to your clients' decision-making at this point in time? When I talk about geopolitics, obviously in this part of the world, we talk about geopolitical tension, but then more broadly, you talk about geoeconomic fragmentation, the possibility of even more tariffs worldwide. How much does that get factored into decision-making, do you think, right now?
I think it does. You know, maybe Jean might have a sense of this on the asset side, but probably in two buckets. You've got the tail risk of things going really horribly wrong, where you know, there are some big geopolitical events that are happening in the world, and outside of the localities where they're happening, the broader economies are not war economies. We're not repurposing broad economic activity towards military activity as is happening in the localities. It's you know, the economies are running as they will. So there's the tail risk of if something goes horribly wrong and you're really having to do that, materially increasing your defense budget or really putting resources in that way, then of course business people need to think how that might, you know, impact things. And then there's the general sentiment around that and confidence levels and a worry that, you know, things may go horribly wrong. But in the broad range of sort of BAU, as it were, then I think the geopolitics manifests itself in trading relationships, tariffs, non-tariff barriers, and that can permeate into economic policy as well. So you've seen tariffs on cars and EVs, and the EU has debated at length what sort of tariffs they should put on Chinese EVs. And you know, and that has been a rigorous debate, and some governments were for that and some were against. There's a lot of debate as to what the US's policies on tariffs might be going forward. And around the world, there are lots of micro constituencies in different parts of the farming sector and in other parts of the economy that are feeling that sort of the tensions of growth, or are feeling the effects of inflation. And insofar as governments are not able to come to a broad agreement around, you know, a framework for deciding these, then I think businesses are a little bit worried. I mean, I'd say very broadly, the WTO hasn't worked very well recently. And you can argue for all the reasons why that isn't a mechanism to solve trade disputes. But that is a concern at the back of it. And then I think, finally, I think instinctively we all recognize that perhaps some of the economies might not be in so much of a balance. If you take debt to GDP levels, the US is just a little bit over 100, France is maybe 110, 120, I don't have the exact numbers, the UK is around about that, Germany is at 60.
Yeah.
It's not clear that Germany should be at 60, I'm not sure France should be at 120. China probably has too high a savings rate. And so our ability to adjust for that, whether it's Plaza Accords or whether it's WTO type, those mechanisms aren't working so well. And I think that's where some of the geopolitics comes in.
Fascinating. Jean, when I was talking about some of the risks for markets next year, for the global economy next year, I did mention financial market volatility. And I'm recently reminded of two strange events that happened in markets. I walked in one Monday and the Nikkei was down more than 10%, massive drops. And one thing that's happening with these markets is you're seeing hotspots, areas of concentration, which means money goes in quickly and money goes out quickly. To what extent do you think that is becoming a feature and also a concern for financial market participants?
Well, the markets, the structural change in the financial markets over the last 20 years has been profound, like really profound, in the sense of it used to be that long-term investors priced the markets, and I think that's still true, like value still has to happen long-term, but in any short and probably multi-year period, sort of the systematic part of the market is pricing. And so I think you should expect, in my career as an investor over the last 30 plus years, we've had these moments and they seem to be happening at a greater frequency. And so for us as an asset manager, how do we adjust to that and how do we adapt to that? And so we just invest so much more in sort of risk metrics that help our investors determine where these might occur and how to address them in portfolio construction. Portfolio construction has to be so much more sophisticated than it was when I started out investing in the mid-90s. So that's just, I think it's a feature of the market. I don't think it means that we won't have well-functioning markets at all. I just think it's a feature of markets that it will be abrupt. And I think the one enduring part of investing that still probably is very, very differentiated is those that can take the longest term view.
Yeah.
That can really withstand that volatility. That's probably where you'll have the most differentiated returns.
Well, Andre, I'm going to round up the panel with you. And I guess you're going to get the US elections question because there is a big US election coming up next week. What do you think the return of President Trump would mean for the global economy, given his favorite word in the dictionary, as he told our editor-in-chief, is the word tariff?
Oh, maybe the best way of wrap up is commenting on the previous questions. And I will start with your geopolitical question about tensions. And I think definitively it's changing the landscape for global FDI. Absolutely. I'm not short-term pessimist with geopolitical developments. In reality, I'm a little bit contrary. I'm more constructive about what can happen in the next 12 months. I think we'll be better than the last 12 months in the world. But having said that, the tensions will continue to be there. And the tensions are enough to change the landscape of global FDI. So neutral, peaceful regions are getting much more FDI than the core of the divisive world. Because if you are a Chinese infrastructure company, it's not easy for you to make an investment in the US, in Europe, maybe in India, but probably you can do in Brazil or Latin America. So these kind of examples, I think, are spread over the world. So definitively, I see the tail risk, the existence of the tail risk changing the landscape of global FDI. Regarding US elections, I think markets are preparing for that, and I don't see a disruption in markets coming. Of course, we need to see the policies, the people, the appointees. Of course, a continuation regime is kind of a continuation. More or less, things will be similar to what they are. If we have a change in regime, we need to analyze people. But as was said here before, US, with all the challenge that it has, and we spoke about the deficit, has been an amazing economy and a huge attraction for global capital markets. So I'm not bearish with that.
Excellent. Well, Your Excellency and panelists, thank you so much. That concludes our discussion. Thank you.
Thank you.
Good afternoon, and thank you for your patience. It's a long, long day, and it's just almost the beginning of the day. And I'm extremely happy, and I decided to be selfish today. This is why I asked my team that this conversation I want to moderate, because Shoshu is one of my heroes, even if my family is making a lot of fun of me for years and years, because I was one of the first users of TikTok. And despite many people challenging me about why, before going to bed, I spend almost, so I'm sharing some secret with you guys, half an hour every day on TikTok. I find that it's an amazing platform, what you have created, despite all the critics and the challenges you are going through, but it's not the purpose today. But I want to share with you, and you know, in the Kingdom of Saudi Arabia, almost everyone is looking at TikTok, I can tell you. Huh? If they say no, they are lying. Because I know that many people are forwarding me a lot of TikTok stuff. So, yes or no, guys? Be honest. You see. So, Shou is the Chief Executive Officer of TikTok. And of course, he is leading the overall business and bringing the company's vision to life. So, just for you to understand who is Shou, he has been part of the TikTok family since its inception. He was born and raised in Singapore. And he attended the university in London. So he holds an undergrad degree from University College London, UCL, and an MBA from Harvard Business School. So he's a smart guy, and this is why one day he probably had this great idea of having this original spark that ignites the idea for TikTok. So what was exactly this original spark show?
Yeah, it's Richard. I think it's we have to start from the mission of the business, and it's important because ultimately, you know, we have thousands of employees, and every day they're building towards something. The mission that we have is inspire creativity and bring joy. So that's sort of, you know, and I'll come back to this in a second, because if you use TikTok, it sounds like you do, every night for 30 minutes, you know, you could spend more time if you want. What you will find is a very creative experience. It's a very joyful experience. In terms of the original spark, you know, the idea was to present content to users, not based on who you followed. Because, you know, back in 2012, 2013, the social network was all in the rage. And it's all about building your social graph, meaning, you know, getting people to follow you, building out that graph. And the content that you will see is going to be based on people that you follow. And I think that's the model that many of our peers in the market still follow today. But we have brought something very new to the table. You know, we recommend content to you not based on how many people follow you, but based on interest signals. Meaning if you have a good message, if you have a funny video, if you're a small hippo in Thailand, which has gone completely viral, called Mudang. If you haven't seen it, you should search it.
Yeah.
If you have a good message, you don't need any followers to begin with to become viral, to make sure that your message is heard by as many people around the world as possible. And I think that's the difference. You know, that's the key difference that we bring to the table.
But what was the main decision you made to turn almost what was a small app to what is becoming now almost a cultural phenomenon?
There are a couple of things that, you know, as in the last 10 years, first of all, machine learning and AI enable the recommendation algorithm to be as useful and as interesting as it is today. It's very accurate if you think about it. There's no human curation really that goes into the recommendation process. It is really about, you know, using machine learning and then matching your signal interest with potential signal interest that you could have. And that's really sort of the magic of the algorithm. Now, beyond that, you know, in the last 10 years, everybody has a smartphone now, you know, so, and smartphones have cameras. So we decided that the app was not only going to be based on text, it's not only going to be based on pictures, but we opened up video. And we made video the main format for the app itself. And that's another innovation that we brought to the table. And the third is, of course, you know, this idea that everybody should have the chance to publish. So it shouldn't just be in the hands of, you know, a small group of people. We allow essentially anyone with a camera, anyone with creativity to be able to create something very quickly using all the tools that we give them and be able to share their message with the world. So that's really the difference that we brought.
I know you are under huge pressure and some critics, so let's make a pitch to our friends and to the millions of people who are watching us. How TikTok could be a force for good?
Yeah, I think a lot of people still have this understanding, especially people who don't use the app that much. They think that the app is, you know, for young people, is dancing, is singing. Well, that's all true. You know, there's still a lot of dancing and singing. But it's more than that now, because we have more than 1 billion users around the world today. In many countries...
How many as of today, do you know?
We don't disclose the specifics, but it's definitely significantly larger than 1 billion active users around the world. And if you think about, you know, the content that we have even in this country, you know, I was looking at the feed. Whenever I travel, I look at the feed. And it's my third time in the kingdom in just this year. There is somebody called Abdullah El-Alawi, for example.
Abdullah El-Alawi.
El-Alawi.
Okay.
He's a local creator. He shares a lot of content about local culture. For example, I learned that I'm going to say this wrong, the Schwab. Mm-hmm. Yeah, he talked about the history of the Schwab, the fishing net, and the years of the wheat, and how, you know, that original practical use is married into the culture today in the local context. It's amazing. I mean, I did not know about this. You know, I think there is a female footballer called Farah. She plays for Etihad, I believe. Mm-hmm. She's on the platform and she's encouraging young women to learn about the sport. to pick up the sport. So it's no longer just about, entertainment, the light dancing and singing, which is still important. It is now about community. It is about education. It's about heritage. It's about culture. It's about the arts. And I think that's a significant positive change to the world.
So let's continue the pitch. How TikTok could make us more creative and not just be distracted and become addicted to an app which is, forgive me to be a little bit provocative, useless, So how can it help us to be more creative? No,
Yeah.
because I will be very honest, I find great ideas, as a creator of also platforms. I took 2-3 ideas from what I found on TikTok. So if I'm asking the question, because I am convinced of the answer, but I would like you to continue this speech on how can we be more creative, or how can you help us to be more creative?
We provide tools. Well, first of all, to inspire creativity is the mission itself. We talked about the mission at the start. Inspire creativity, bring joy. So creativity and joy. And joy is important. We'll talk about joy in a second.
This is your DNA. The DNA is creativity and joy.
Exactly. It's built in the mission statement of the company. So what we provide is, if you open the app, you click the plus sign at the bottom, you go to effects, you're going to see thousands and thousands of effects that we bring to the table to help spark people's creativity. It's a tool that enables them to express themselves better. In terms of the content pool itself, what we are seeing is that things like book talk. Book talk is a very organic movement on the platform where people talk about books that they like. It has tens of billions of views around the world today. There is something very interesting that we launched in the US about a year ago called the STEM feed. So this is if you go to settings, content preferences, turn on STEM feed, you will see a feed where it's only science and math content. And we are going to launch this in the kingdom as well, in conjunction with the Science and Technology University here as well. So we believe that this should be a platform that's not only about creativity and fun, but you could learn something as well. And we're going to take all the STEM and math content that we can find, and we're going to put it in this dedicated and specialized feed for our users in this country.
So what do you think is, we spoke about the DNA, but what do you think is your responsibility or the responsibility of TikTok vis-à-vis humanity? Let's be ambitious. We tried the FI Institute to have an impact on humanity. We spoke a lot here during the past few hours about how to invest for good, how to invest for purpose. So I think as a founder, you wake up in the morning and I think you should ask yourself, what is my legacy? What I'm doing good for humanity? So what is the responsibility of TikTok?
We think that the legacy is going to be defined by the mission. The mission, creativity and joy. And it is important. We talked a lot about the creative components. We can translate this into economic activity. So today in just the kingdom, we have 125,000 businesses that use our platform. And because, we talked about this earlier as well, you do not need to be famous. You don't need to have followers. If you have a good message, you're going to get an audience on TikTok. And that's the difference that we bring. So businesses with good products and a good message can find it very easy to get access to a large audience on our platform, which is why they embrace it so much. Most of them don't pay us, by the way. They just post content on our platform. It's interesting content. They get the audience that they want. So on an economic point of front, I think we are contributing to the local economies that we are in as well. And in terms of joy, there's one other thing that people don't talk about, but we are very proud of it, which is for a very long time, people assume that the only way you get viral is to say something controversial, outrageous, angry, toxic, you name it. Provocative, you name it. But if you look at just two angles, if you look at the top 10 videos of TikTok every single year, we publish them, we're going to publish them again very soon. They're all joyful, every single one of them. Last year, there was a cat that looked like a dog. There was a dog that sounded like a cat. This is really very joyful types of content. And the #1 creator on our platform, his name is Kabi. Kabi is a comedian. He is famous for just being entertaining. He's very creative, the way he's entertaining. I'm not sure if you've seen his videos. He does his face.
Yeah, I saw.
Kabi was unknown before TikTok. So unlike many other platforms, he wasn't famous before. He wasn't like a famous politician. He wasn't a famous soccer player. He wasn't a famous celebrity. He was a factory worker in Italy. He had talent, and he became the #1 creator with 160 million followers on our platform. I think the joyful and the creative and the discovery element of this will define the legacy of our company.
Let's talk now about TikTok's role in journalism, if any role exists. I'm a strong believer on the traditional media, and we are doing whatever we can here to support the traditional media. This is why next door you have our media square, where we have all the traditional media, and a lot of respect for them because they have the power to share the knowledge, to share information, to give access to knowledge to many people. But with news and information moving to social media, do you think that traditional news sources like TV, print, become obsolete?
I don't think so. I have a lot of respect for what you call traditional media. I think there's a lot of value in editorial standards, in robust, journalism, and I think this is an industry that we want to be. We want to help them. We want to help them reach a bigger audience as well. So our platform is open to many news media outlets and many publishers, and a lot of them embrace our platform, and they have found much larger audiences that they could have in a more traditional sense. Just print and digital. On TikTok, some of them have tens of millions of followers, and they're able to bring their robust news to an even greater audience. And it's something we have been working closely with the industry to power. In the kingdom, we're working with SRMG Academy, for example, to help onboard more journalists, especially tech journalists, to better understand how to use TikTok to get a bigger audience. So I see us living in a very sort of symbiotic, relationship, rather than one of replacement.
At the FI Institute, we publish every year the FI Priority Compass, which is a big survey asking to many people in the world, thousands and thousands of people, what is your first priority? To make a long story short, this year, 2024, for the third consecutive year, priority number 1, cost of living. Priority number 2, something new, governance. Mm-hmm. And number 3, healthcare. Back to governance, we were asking more questions, and just to share with our friends and members, and these results are on our app now, we released the report this morning, 75% of the people in the world consider that the world is not going in the right direction, and 66% consider that their own country is not going in the right direction, except, and trust me, totally objectivity, the Kingdom of Saudi Arabia, by the way. But the big majority consider that the country is not going in the right direction. Do you think that TikTok is eroding public trust also in government and institutions? Because they always pick this information through social media. Social media are very influential, as you know, and this is how the public opinion is building its own opinion. So do you think TikTok is eroding this trust or highlighting this trust?
I think we bring a voice to many people. I think we bring creativity, we bring joy. We're also aligned that dangerous misinformation has no place on our platform. So the way we govern our governance on our platform.
Yeah, this was my question. How do you control?
We have a set of rules that we call our community guidelines, and these guidelines are available on on our website. So if you go, it's there. It's about 30 pages long today. We change it, and update it every now and again with refresh guidelines. In the guidelines, you will find things that we allow or disallow on the platform. And there are various rules here. There's sort of things that we absolutely do not allow, like dangerous misinformation, like violence. We take it off the platform. And then there are other things that we do not allow for our younger users. So if you are below a certain age, our content is actually more restricted for you. We have a more restricted experience. We don't allow you to use a few other features on our platform, like no direct messages by default if you're below 16, no live streaming if you're below 18. We put some restrictions on how much time you can spend on the platform if you're below 18, and we give parents a lot of tools to control the experience of their teenagers on our app. Because, I have 3 children myself. I understand that parents need tools to be able to. On the one hand, you want your children to be part of the digital world because that's the world that we live in. On the other, I think we all need more tools to be able to have conversations to build a healthy relationship between our children and their digital devices and apps that they use. So I think we're very aligned on many of these things. But generally speaking, the fact that this platform exists and it gives the normal person a voice, the small business, the soccer player, someone like Abdullah Alawi, a voice to share about their heritage, their culture, their history, and their perspective on the world. I think that's actually a net positive. We just have to make sure that our community guidelines are well enforced.
Two short last questions. First one, which advice would you give to the young entrepreneurs in Saudi Arabia, in the region, if they want one day to create something equivalent to TikTok, or, how you start? Here there is, in the DNA, an entrepreneurship mindset. So what are the two advices that you will give to the young entrepreneurs?
Yeah, my experience of talking to younger entrepreneurs is typically I learn more from them than I find that I can say, because times are changing. And a lot of times, as companies get bigger, we spend too much of our time in the internal building and the mechanisms. And sometimes, meeting young entrepreneurs and, they're so close to their
refreshing.
Users. They're so close to their product. It's so refreshing. If I maybe were to say one thing, it would be to continue to do that. Get first-hand information. Don't rely on, your managers to write reports for you. Go speak to your users. Don't rely on reading reports on how AI works. Just go download the app and try it. Just try it yourself. Don't lose that. Because I think as businesses grow, we tend to lose that.
Sure. At the FII, as you know, we look forward, and the closing session in a couple of days will be about the world in 2030. How do we see it? And even maybe 2050, which is literally tomorrow. So what do you think are the opportunities and the challenges for TikTok by 2030 and then by 2050?
I think it's going to be around 3-4 things. The first is trust. I think our industry is undergoing a period where, our industry as in, social media broadly, is undergoing a period where people have questions. Is it, how are you thinking about this? How are you thinking about that? In the countries that we operate in, we are very global platforms in the sense that our users are all around the world. But in every country that we operate, the experience is deeply local. So I think earning trust locally, earning trust, just generally as an industry, is going to be a big challenge for us, all of us. And trust earning is not about, being able to market yourself very well, although that helps. Ultimately, it's going to be based on the things that you have done. Did you fundamentally go address people's concerns?
And AI?
Yeah. That will be the technology part, which will be my third part. I think embracing technology and making sure that, this is clearly is moving at a very fast speed. So we need to stay on top of it and understand the impact it's going to have on our business. And that in itself is challenging. And then, of course, it is making sure that we continue to hear what our users want. We built the e-commerce experience because our users wanted it. They saw something they liked. They said, can I just click and, transact? Why can't I do that? So it was in response to what they told us that we built that. And it's important to continue to do that. That will be the second thing. And finally, it's just, keeping the organization fresh, young talent, people coming in, bright ideas, and good ideas, making sure that they can be heard and they don't get lost.
Thank you so much. Ladies and gentlemen, Shou Shu, the man behind TikTok. Thank you.
you've done the poll. Now we're going to actually talk about the future of energy and energy transition. And I'm going to begin the discussion with Amin Nasser, who, of course, is the president and CEO of Saudi Aramco. Amin, welcome.
Thank you, Dan.
Amin, I'd like to take you back in time, not back to 1980 when you joined Aramco, but only take you back 1 week. A week ago, you gave a very important and impactful speech in Singapore in which you said current transition planning for the energy transition does not take into account the needs of Asia and the global South. What did you mean by that?
You know, just to explain what's currently happening, you know, we are, as Saudi Aramco and as a kingdom, we are investing big time in renewable and hydrogen and carbon capture and storage. So we are for the transition, but at the same time, we are making sure that we are growing our oil and gas activities and petrochemicals. So if you look at our emissions and methane and CO2, it is the lowest. So we are not really against the transition. Actually, we are for the transition, especially with the Kingdom Green Initiative and all of that. The issue that we are seeing between the global north and the global south, that in the global south, they are using today 1/10 of the energy compared to the global north per individual. Basically, if you look at it, it's 22 barrels per individual in the US, it's 9 in Europe, it's only 1.4 barrel per individual in India, and it's 1 barrel in Africa. At the end of the day, cost matters, and we can see when you want to have a transition that is acceptable to all, especially where the growth in population and GDP is mainly in the global south, you need something affordable. The average per capita income in the global south, you're talking about $6,600 to $9,600 compared to $63,000 to $68,000. So you need an energy transition that is affordable, secure, and at the same time sustainable. We are seeing today in the global south, the issues that they are raising in terms of affordability is of a high concern, and they need a just and inclusive transition that takes into consideration their needs and requirements.
So when you say a different thinking, how does the thinking need to change?
I think what you need to do is to transition by focusing first in reducing the emission from existing energy sources. We talked about coal peaking up. Coal increased last year by 2 million barrels of oil equivalent. We are at record level in oil, at record level in coal, and at record level in gas. So while we are not achieving our target of reducing coal, and it is continually increasing, we need to focus on reducing emissions. We achieved through efficiency improvement 90 million barrels over the last 15 years, 90 million barrels reduction of oil equivalent, compared to 15 million barrels of oil equivalent that was added by solar and wind.
So in the speech, you used the phrase a multidimensional energy transition. What is that?
Well, you need to take the economic maturity of every country, their needs and their requirement, and then transition, it will always depend on their economic maturity and what they can afford at the end of the day. If we need to help them in terms of making sure they don't get to coal, biomass, and more use of other sources that are not clean, we need to extend support by developed countries and to the global south for them to be able to transition. Because if I look at the cost today in the global north for power, for energy, if you look at Europe or the West in general, you see the cost of power is increasing. What was promised when the whole issue of transitions came that it will create jobs and it will reduce the energy cost. Well, what we are seeing is the energy cost where you are transitioning more is increasing and the creation of jobs is not happening. So you need to reduce the cost and you need to show the rest of the world that the cost is decreasing, not increasing because of the transition.
So you've mentioned emissions. Obviously, that's a big focus for Saudi Aramco. CCUS, what are the focus for you in terms of managing emissions?
Well, we're building one of the biggest projects at 9 million ton by end of 27, early 28. And basically, we have been working on for a number of years to identify the aquifers that will create the hub that would be required to facilitate not only the 9 million ton, but other emissions, CO2, that might come from the rest of the industries in the kingdom. So we are creating a hub that will cater not only for Aramco, but for the rest of the kingdom. And we identified the aquifers, the storage capacity through exploration and drilling the pilot wells that will be sufficient to satisfy the kingdom requirement by 2060.
So where do you think you are in terms of turning CCUS into a commercial business?
Well, CCUS today, without incentive, it's a cost. So at the end of the day, companies to achieve their net zero, we are doing it. It's a cost for us. We're getting some support from the Ministry of Energy. The Ministry of Energy is very supportive when it comes to carbon capture and storage. And through that support, and because of our plan to be net zero by 2050, we need to execute projects like this and others in the future to meet our net zero by 2050. But the cost of these projects, these are big plans. It will require cost mainly in the capture of CO2. Then you have the transportation and then the injections in the world. Most of the cost is in the capturing of the CO2.
So really, people talk about big oil. There's a new business called big carbon, which is the management of the carbon business.
Absolutely.
So, of course, Saudi Aramco has the longest vision of any oil company in the world, but you do live in a world of volatile oil prices. I think everybody would like to know kind of how you and Aramco see, from where we are today, see the market in the rest of this year and into next year, given that it's been torn between, on the one side, geopolitics, on the other, supply and demand.
Well, I think the market is currently balanced today. It's definitely the increase in interest rates, what happened in China had an impact, but still it is balanced in terms of supply-demand fundamentals. We are looking at 104.5 an average for this year. The fourth quarter, we're looking at close to 106 million barrels. Gas is also increasing. So next year, we are anticipating a growth of about 1.5. We think the stimulus package that the central bank in China, the growth in petrochemical, we are seeing significant growth in petrochemical in China, naphtha and LPG, mainly because of their transition, by the way. In every, I see a wind blades here, there, and for a 5 megawatt of wind blades, you need about 50 ton of plastic. For an electric car...
So repeat that again so people hear that.
For 5 megawatt of wind generated power, you need 50 ton of plastic. For every electric car, you need about 200 to 230 kilogram of plastic. 10% by volume, 50% by volume, 10% by weight. So the transition, even by the way, in solar panels, we have 10% comes from fiber and all of that. So for the transition to happen, you need more oil. So China is increasing in naphtha and LPG. In jet fuel, there is small impact on gasoline because of the buildup in electric vehicles and because of the economic situation. But in general, there is still growth in China. When people talk about China, I see that they are always trying to maximize the downside and ignoring the upsides,
right.
Unfortunately.
So we'll come back and talk about that. I think just the last, we're going to invite our other colleagues up in a moment. So a big question, but a very short answer. Is AI having any impact on Saudi Aramco?
Definitely. AI is important and strategic, and we do it. We have created a business 2 years ago for digital and AI, and it is included in everything. If you visit our 4 IR center, you will see everything is, all our equipment managed using data and using AI. And we are building the use cases, which is important and critical for our business. 300 to 350 use cases right now we are creating. And these use cases is what, with AI application, each use case has a timeline, has a cost savings with the application of AI, And I can later on in the give you some examples, but it is really giving us a lot of cost reduction. It helps us not only in cost reduction and more efficiency, also in reducing our carbon footprint.
Well, thank you. Let me invite up our other panelists, if we can. Mohammed Abunyan. I'm looking for our other panel. Here they come. He's chairman of and Luc Remont, and then I'll introduce them both as they take their seats. Mohammed is the chairman of Aqua Power, which has 65 gigawatts in the Middle East and around the world. He's also chairman of Vision Invest and really a champion of Vision 2030. And Luc Remont is the CEO and chairman of EDF, which is known as the French nuclear utility, but is also a very big player in wind and solar renewables around the world. So welcome both of you to the panel. Thank you. I thought I would just start by picking up from where Prince Abdulaziz left off today when he talked about the role of renewables in the kingdom, and asked both of you just how you see the role for solar and wind in Saudi Arabia and its growth potential.
Thank you for inviting me to join this great audience. To be frank with you, I don't know why you invite me to be in this panel after the great presentation of His Royal Highness Prince Abdulaziz and the great speech, and really how he showed to everybody in the world that what Saudi Arabia has done and has made this country is really 100 steps ahead compared to many countries that they talk a lot and they do very little. But you know, it's really, I have to say, this is very difficult. But for us in Aqua Power, we are very proud and we are delighted that we believe in the green energy. I'm not here to have any confrontation with my big brother, who is, you know, for us, is our live is always depending on him, how we live in this country. But reality today, we believe in renewables since 2008, 2009, we done our first decision in the strategy. We done our implementation in 2010. And I have to say, I think, as he said, His Royal Highness today, you know, Saudi Arabia is not giving subsidy as many other countries. Saudi Arabia is getting very high returns using, you know, the renewable versus the conventional energy. But you have to say that, you know, I'm sure you know it better, that you cannot really take renewable and replace the conventional. You need both to make it happen successfully, and you have the right solution.
Right. Luc, you can invest anywhere in the world in terms of renewables. You have 5 or 6 gigawatts in Saudi Arabia now, more to come. Why the kingdom?
Well, I think it comes first because of the speed at which Saudi has taken the challenge of going low carbon on electricity. And we have very limited parallel in the world. We have found here in Saudi partners and an ecosystem where we can bring our know-how and work together with our partners to ambition to go in a couple of years up to 6 gigawatts, as you said, of low carbon generation, renewable generation, but also with an approach of electrification that is comprehensive, which is not just taking the renewables generation, which has, of course, great benefits, but also intermittency, but also starting to move now in the direction of having a full system that is sustainable in a low-carbon electricity approach, including storage, where we have pumping storage projects and also battery storage projects. All of that combined makes a system for electricity that is reliable and uses less and less carbon.
So when both of you look at renewables, obviously a lot of money going into wind and solar, general, not just in the kingdom, is enough money going into the infrastructure, into the grids, into storage?
And this is what is really differentiating factor in Saudi Arabia. Thanks to our great leadership and thanks to His Royal Highness, the Minister of Energy, many countries, they want to do it, but they did not know how to put priorities. I think in Saudi Arabia, really they thought about this grid early and how to strengthen the grid and how to make the grid is available to take this renewable. Because in many countries, you know, the biggest obstacle today is not about renewable, is really the infrastructure that available, the grid is availability, and how you will be able to take the renewable, because it's a different in the operation in the system. And that's what makes here successfully that Saudi Arabia reach 44 gigawatt project under construction, project under operation, project in an advanced stage of development, that there is a clear vision and a clear objective that this grid is going to take 130 gigawatt in the future of renewable. And the storage, as you see today, you know, you are talking about contracted storage of 26 gigawatt, and storage by 2030, you are talking about 48 gigawatt. This is going to be the biggest storage today in any system. We are, again, you know, as I'm sure that you know, we are working in 14 countries today. And this is we've seen all these countries, how they do and how they make it. The only two countries, I have to say, that they are only very well prepared, and we are participating in it, is Saudi Arabia and China. I have to say this is the two countries that I have seen. They have a clear plan and a clear execution, and they commit and they deliver.
So, Luke, do you want to comment both? I think that you have some support in the audience. Comment on the question of infrastructure, not only Saudi Arabia, but looking around the world. And wanted to ask you about, we hear there are a lot of issues now about supply chains in the renewable supply chain, how you see it on a global basis.
Well, as the world is moving into the direction of renewables and electrification, of course, there are tensions on the global supply chain. This is particularly true for wind power today, notably offshore wind. It's also true for cable. You know, high voltage cable is clearly something that is under tension everywhere in the world. Now, the more the countries can define a very clear roadmap and stick to their roadmap, the less depending they are on these supply chain tensions. And I really believe that the kingdom is super clear on the direction. So that's the best way to avoid the tensions that might go up and down on the supply chain, is to have a super clear roadmap and to stick to the roadmap. And this is the case in the kingdom. In our case, the most critical resource that we are aiming at today is knowledge and people. And that's why I believe that electrification is today the best chance for the kingdom, because we are, thanks to the projects that we are leading today, we are building competencies and capacities here in the kingdom with people, with great engineers that are trained in the country, who have the opportunity to start their careers on the projects that we are leading, moving up from a solar platform, which is not that complex to build, to now the last project that we are engaged in, which is a full city in Amala on the Red Sea, where we are aiming at having a 100% low carbon electrified city plus water, which is a fully integrated electrical system, also built thanks to the competencies that we are also building in the country. So man resources, competences built in the country is the most critical resource.
If you allow me, you know, I would like just to add one thing, and this is, it has been also presented by His Royal Highness, that Aqua Power has worked together with BIF to localize the value chain of renewable.
Yes.
5 years ago, we started, you know, our colleagues and our partners from BIF to go to China and to go through this. And today, I'm very happy to say I was in Hexagon last week, and I saw the land has been contracted for $6 billion investment of solar and wind manufacturing, midstream and downstream. And Saudi Arabia is going to be in production of 20 gigawatt by end of 2026, you know, where you will see the first production. You are talking about, you know, and this is very important and very relevant, that China came to Saudi Arabia to use Saudi Arabia is the hub, as His Royal Highness said. It's not for Saudi Arabia local content. It's a hub for the world.
Right.
And this manufacturing in Hexagon will export to MENA region, to Africa, to Asia, to Europe and United States. You know, and if you see the expansion plan is a huge. I have to thank BIF under the great guidance and the support of the Ministry of Energy. But I would go to the youth, where His Royal Highness has mentioned about our young youth. Aqua Power has invested in vocational training, and we are very happy to tell you today that we have 15,500 young youth has been graduated from this IWA in Rabagh. Right. Today, we have 830 boys and girls studying in the vocational training, because local content is not about production only. It's about human capital. That's more difficult, and that's more important and relevant. And this is what we always promise in Aqua Power, not only to do what we are doing for our own businesses, but to be able to do things for the ecosystem.
Right. So let me ask, Amin, how much solar are you using?
Solar?
Solar, are you using integrated into your system?
We are building in collaboration with PIF and Aqua Power. We are a 30% partner in what is being built in the kingdom as part of the 70% allocation for the 3 entities. We use it as part of the grid, because at the end of the day, we have to be concerned about scope 1 and scope 2. Scope 1 is the emission that comes from our facilities, and we take care of that by making sure that we are more efficient. But scope 2, and this is where renewables and others will have an impact in reducing our emissions. So at the end of the day, when we invest in building more renewable in the kingdom, it supports the kingdom, but at the same time support Saudi Aramco in terms of reducing our emission and meeting our net zero by 2050.
Right. So, Luc, let me ask you a question, switching to nuclear. It was in 1974 when President Pompidou of France said, France is going nuclear. Today, 75% of your electricity is nuclear. You're one of the leading utilities in it. But for a number of years, you were sort of an island because nuclear, shall we say, went out of fashion. Now there's this big revival of interest in nuclear around the world. Why is it happening, and how do you see this revival?
Well, there's clearly a global revival for nuclear, which is, I don't think this is a question of ideology. This is just the result of electricians doing their math, which is that if you want to be serious about having an electrical system that works 24/7 and has also the lowest possible content of carbon, you need to have dispatchable power sources that are not consuming carbon. And the only ones that are doing this are hydro and nuclear. So that's why a large number of countries are considering nuclear in the future as part of their electrical mix. Some of them are starting from a very important part of existing nuclear. That's the case for the US, for France, and today for China. Others are starting from a much lower part, but depending on everyone's legacy, there is a must at the end to create an electrical system that can resist to the fluctuation of demand day in, day out, independently from the fluctuation of wind and sun. And that's something that today has no other answer, where there is no part of hydro plus nuclear. If you have big resources of hydro, you may be fine. Right. If you don't have big resources of hydro, then you need a portion of nuclear.
Now, a very hot subject in nuclear is small modular reactors. You guys know nuclear technology. Is that the future?
Well, the great news is that there is innovation in nuclear. That's the great news. Any industry that is showing initiatives, new developments, new ideas, shows that this industry is in good shape. And it's great to see that the nuclear industry is attracting new ideas thanks to SMRs.
Dan, if you allow me, sorry to interrupt.
Sure.
You have to know that I don't like nuclear.
What did he say?
It is really, I have to say, nuclear is great for a country like France. For some other countries, they have no other alternative. But, for us in this region, in many regions in the world, you need safe energy, and very safe. You need competitive, you need reliable, but you need also economic. And thanks to the Chinese, They have made the technology of renewable affordable, 24 hours, and very safe. And I have to say that thanks to the Chinese, they made us less depending on this nuclear, thanks to the oil and gas industry and the great, in these countries, we not need nuclear. Nuclear, in my opinion, my friend, my brother, it is great for Europe. This is their issues, and some other countries. And this SMR is going to be shut down. Why? You know why? Because the United States of America and some other European countries, they cannot do these data centers green. They have to come to Saudi Arabia to do green data center. And this is the only country will lead the data center, will lead all the demand of 10% of the energy.
Well, let me interrupt you there, because I know that Saudi Arabia has great potential in this, but I was talking with Luke before about, is this demand for data centers, is it as real as people think, or will efficiency counterbalance it? Because right now there's almost a panic in the United States about how are we going to meet our electricity demand in other countries. But I think you have a mixed view of that.
Right. If I can just answer on one word on nuclear, I mean, everyone is free to have its own opinions on everything, of course. Sure. And my friend, above everyone, of course. I would just like to say that if the Chinese had invented the electricity that goes renewable 24/7, I don't think that they would be building 10 reactors per year.
That's what you are buying in Amman. You buy your battery 24 hours. You just said that. I bought in the Red Sea 24 hours.
Okay, let's let Luke and then Mohammed, your chance.
On a country level, of course. On a country level. Look, on data centers, that's clearly a growing demand for electricity. It's going to be a growing demand in the future. That's something that, of course, depending on the countries, represents a more or less big part of the future demand in electricity. It can be fulfilled, I believe, in each of the countries. It just needs to be taken as a growing industry with, of course, the permanent effort on being more efficient from an electricity and energy standpoint, and to make sure that we supply this demand with sustainable ways of supplying the electricity to these data centers. Yes, this is going to be growing. This is also an opportunity for each of the countries, and I believe it is one for the kingdom, and I saw the data center industry really rising in the kingdom over the last few years as an opportunity to build a data environment in the kingdom as a great opportunity for business here.
Amin.
I think, just to answer I think we need all sources of energy. We need SMRs, we need solar, we need wind, we need hydrogen, and we need oil and gas. And I'm sure some coal will still be there by 2050. So you need all sources of energy. Sure. When you talk about data center need lower cost energy. Today, the cost per kilowatt hour in the UK is around 27 cents per kilowatt hour. In Germany, it's 17 cents per kilowatt hour. In France, with the nuclear, with the transition, with all of it, it's still 14. The aggregate in the US is 7.8. But here in the kingdom, if you look only at gas, it's 4.8 cents. If you add renewable that Mohammed talked about at 2 cents per kilowatt hour, the combination of the two are going to have the lowest cost energy to build data centers anywhere in the world, because this is the place for it.
Mohammed, do you agree?
He is my boss. I cannot disagree with him, because Amin will not, make my meeting. I'm requesting a meeting with him. Yeah. Don't put me in trouble. But I think what we are saying here, we are very blessed in this country. We have a seawater for cooling. And if you see the cooling system for data center, Saudi Arabia is going to be the best competitive and energy use of data center in the world. AI and data center, we have the human capital, this great young youth in this country. We have the place, we have the space, and we have the great leadership is more important and relevant, because they have the will and they have the means and they walk the talk, as we said.
So it's wonderful, this panel on discussion of future energy trends circles back to all the issues that have been talked about this morning, about AI, about Vision 2030 in Saudi Arabia, and how this push towards energy trends and AI also ties into the blessed energy position of Saudi Arabia. So please join me in thanking our three panelists for a great discussion.
Thank you.
Thank you, Dan. Appreciate it.
To Dan and your panel, thank you very much. Very interesting conversation. And we're going to keep moving. I'd please like you to take your seats once again so we can enjoy the next panel discussion, and ask you at the same time to put your hands together for Masayoshi Son, Representative Director, Corporate Officer, Chairman and CEO of SoftBank Group Corporation, and he'll be in conversation with CNN's Richard Quest. Gentlemen.
Years, I have done a gazillion interviews. I've interviewed everyone except you. But I've never had more interest in what I was going to ask than I'm asking you. Everybody here has at some stage, you've got to ask him this. You've got to ask him that. So let's start with what is interesting to you. I know it's AI. I know you are, and the quote is, I am obsessed by realizing artificial superintelligence. Are you still obsessed?
Definitely. I'm only focused on that.
What does that mean? You're only focused on that. Explain.
Well, that will change the mankind's future forever. I want to make mankind's future better, happier, fantastic future. That's what I'm interested in.
So what is the difference between AGI and ASI? To those of us born of a different generation.
Okay.
What's the difference?
Yeah, AGI definition is same level as a human brain. That's AGI, artificial general intelligence. But people have a different point of view definition of artificial superintelligence. How super? 10 times super or 100 times super? My definition of ASI is 10,000 times super, smarter than human brain. That's my definition of ASI, and that's coming in 2035. 10 years from today. 10,000 times smarter. That's my prediction.
What is different in that? What will it do that we should either look forward to or be worried about?
Both. We should be looking forward to that. Of course, we have to also be careful. We have to regulate. If such a superpower comes and no regulation, it could be super dangerous. Of course, automotive industry was very, very beneficial, productive to human, but we have a regulation. Same thing.
No, I don't, with respect, because we don't have anybody in the world who's willingly building or wanting to build automobiles that are dangerous. When it comes to AI, there may be state actors, there may be independent actors that want to build AI that can be harmful to other people. How can we guard against it? How do you guard against it?
Of course, there is always some bad guy. 1%, 2% of human are bad guys. Okay? But 99% of human actually good guys. Okay? So the bad guy, of course, try to use AI for the bad intention. However, those bad guys not necessarily have enough capital. This is a massive capital. Hundreds of billions of dollars of investment is required to make super intelligence. The bad guy, how do they sponsor? There is not enough money to sponsor the bad guys.
You admitted in the past that you were not as involved in AGI, frankly, because you didn't have the money. You ran out of money.
Yes. Of course, money is not unlimited. I had to save some money for the big fight, okay? For the big opportunity. Now I'm saving, tens of billions of dollars so that I can make next big move.
Do you know where that is? I mean, you may not know the companies, they may not even have been started yet, but do you have a very strong compass for the direction?
Yes.
Tell us.
I cannot.
That's what we're all here for.
No. I have my own view.
Go on.
Okay? No. ARM is our core company. Okay? ARM has 99%, or should I say honestly, almost 100% of market share of all the mobile phone chip. 90% of any high-end AI, IoT chip, and all kinds of other chips. So ARM is going to become an AI-centric chip company very soon. AI robotics, not the traditional robotics. The artificial superintelligence comes and robotics come together. That will be a tremendous, product.
The fascinating thing about you is you have been there, you've done it, you've had the great success, you've had the follow-on failures, and you're doing it again.
No, in between I had many mistakes, like WeWork and,
Does it annoy you? Does it annoy you when people focus on WeWork, which was financially big, but relatively insignificant in the great scheme of your finances? And yet everybody says, oh, Masa, WeWork, oh, Alibaba, it was lucky. Does that annoy you?
Well, people should have their own freedom of thinking. I learn more and more by my mistake. And I almost went bankrupt twice, right after the net bubble burst, right during the Lehman crisis. I survived. I actually lost 99% of our company's value, but somehow I came back.
Did you lose that value because you took on too much risk, or was it foolish? Or bad luck?
I don't think, I made that foolish mistake in the big sense. Net bubble crashed because people's view on the value of internet company exceeded while the true value was still on this process. But at the end, internet was not the bubble. Year 2000 was not bubble. After that, it's much bigger. So my general direction, I don't regret.
Now, this is really important when we talk about AI, because if you take, for example, NVIDIA, the number of people who will say, oh, NVIDIA's in trouble, oh, NVIDIA's got problems, blah, 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 oh, AI, really all that's happened is that the market has overvalued too soon.
That's a good question. That's a good question. Many people will still doubt, okay? So I think NVIDIA is undervalued.
What?
Undervalued.
On what basis?
Because the future is much bigger.
But the market's concentrating, as we heard in a panel earlier. It's quarterly reports. It's, oh, if NVIDIA tells us that it's going to be longer and slower, we all get...
Yeah. NVIDIA is just one example.
Right.
Okay? What about the total, Gen AI future? What is the value of the future? Is this a bubble today or not? Okay? Some critics, the most negative guy says, oh, this AGI, ASI, in 10 years, maybe only 5% is actually useful or replacing people's job, but 95% still the same, no change. It takes time. So I say, okay, let's accept the most negative critics' view. That is only 5% change, 95% unchanged, but what is that, ASI investment required to take? Okay, 10,000 smarter than mankind. How many gigawatts? We were talking about gigawatts just before me.
Yeah.
I have predicted it would take 400 gigawatts of AI data centers power. 400 gigawatts. That's bigger than total US electricity. And it will require 200 million chips. Okay? The cumulative capex, $9 trillion. $9 trillion. How do you recoup? How do you recoup? It's too much investment for many people's view. I say it's still very reasonable capex. $9 trillion is not too big. Maybe too small.
You like to think big.
Yeah. So let me say, what is $9 trillion cumulative? But if the 5% of GDP in 10 years from today replaced by ASI, what is the number?
Right.
5% of global GDP is $9 trillion. $9 trillion per year. If the ASI produce you $9 trillion per year, cumulative investment of $9 trillion, small money.
All right.
Small money. You recoup in 1 year for the total cumulative. So that means $9 trillion capex investment you can depreciate. 1 year revenue, that means like 50% profit. 50% profit. It is going to be $4 trillion net income per year. $4 trillion net income shared by new GAFA. 4 companies will take $1 trillion profit.
And you want to be one of them?
Of course.
Right. Before we finish, I just want to ask, let's ask our AI friend here. The question I posed to our AI friend is Masa-san a guru when it comes to investing? I asked this question. Can we have the answer, please?
Masayoshi Son is definitely recognized as a guru of investment. His early $20 million investment in Alibaba grew to $75 billion by 2014, contributing significantly to SoftBank's success. However, for some other investments, there have been mixed results.
Thank you. Quiet, I've got a minute left. I want to ask you, after both difficult times, you went into a period of reflection and contemplation. You disappeared. You thought. You went up a mountain, whatever. What did you learn about yourself?
Well, I say it's a good experience. Good experience that I get defeated, I get laughed, I get criticized. That make me think harder. That make me think I have to be stronger. And that's all good. I learn more, I think more. And before I go sleep, I have lots of concern. When I wake up with a big smile.
Ladies and gentlemen, Masa, thank you very much. Thank you very much.
As unprecedented geopolitical shifts reshape our world, a new global order begins to come into focus. Welcome to the rise of the Global South. How can the Global South become a powerful engine of global growth and infinite horizons? The Global South is pioneering innovative solutions across various sectors as it confronts challenges from climate change to economic volatility. While the World Bank only projects a 1.5% growth rate for advanced economies in 2024, developing economies are projected to grow overall by 4%. Yet, the positive outlook is tempered by downgrades in 3 out of every 4 low-income economies since January. What could shift the tides? How could a combination of strategic adaptability and resilience, sustainable economic development, and technological leapfrogging, powered by government and the private sector, position the Global South as a beacon of growth in a new global order? As investors seeking the next generation of high-growth companies increasingly look to the Global South, how can they identify which disruptive business models and visionary entrepreneurs have the potential to create the next generation of trillion-dollar companies? Welcome to the Rise of the Global South series at the 8th edition of the Future Investment Initiative.
I think that gives you a pretty good idea where our conversations are going next. Yes, we're going to be talking about the Global South. The emerging economies are certainly, without question, redefining resilience because they simply have to. They're certainly driving growth because they have to. And they're reshaping global investment, and uncovering the transformative role of the Global South is what we'll be doing over the next part of this day, and tackling today's economic and environmental challenges in the process. But before we dive into that, we're going to use our AI, of course. So let's hear from you in the audience. If you can point the camera on your phone to the QR on the screen and participate in that poll. And while we wait for the results of that poll, please put your hands together, or maybe your other hand that's not playing with the phone, you can use that to clap and welcome CNN's Eleni Giokos.
Ladies and gentlemen, a very good afternoon. It sounded like you were still holding your mobile phone and you didn't clap properly. Very good afternoon to everyone. We're going to be talking about the Global South. We've got our fantastic panelists with us. I'd like to welcome Mohammed Alaba, founder, Ema Properties, and founder of Noon.com. The Honorable Paul Chan, Financial Secretary, the Government of Hong Kong Special Administrative Region of the People's Republic of China, Katie Koch, President and CEO of TCW, Adebayo Ogunlesi, Founder, Partner, Chairman and CEO of Global Infrastructure Partners, Sanjeev Puri, Chairman and CEO, ITC Limited, and Ricardo Salinas Pliego, Founder and Chairman of the Board Group, Grupo Salinas. Welcome to everyone. Round of applause, ladies and gentlemen. It's going to be a good conversation. We have a lot to get through. You know, the big question we're going to be answering, and I think we already have the answer, and frankly, whether the Global South is now the engine of growth. It is already the engine of growth. We're still asking the question because there's certain metrics we need to hit, and there are certain challenges ahead. The question is, how do we transcend where we are now and hit the overall ambitions that we have in mind? I'd like the audience to get involved, if I may, and we have a wonderful way for you to get involved. And the question I have is the Global South now the engine of growth, and which do you believe has the greatest investment opportunities? You're going to conduct this poll for us. We're going to give the answers as they come through. A, Middle East, B, Sub-Saharan Africa, C, Southeast Asia, D, South America. Those are your options. Ladies and gentlemen, we want you to get involved in the conversation. And as I said, we have a lot to get through. From a metrics perspective, we're seeing emerging markets, the global south, really making a big mark. We have problems though. Debt, slowing growth in China, for example. We're seeing a multipolar world potentially emerging. The fear of the West losing its domination and what it means with the rise of the global south. So, Honorable Paul, I'd like to start off with you. All eyes on China, by the way. We want you to grow faster because we need you.
We are growing faster.
Are you going? But it's not enough.
Yeah. Well, you know, in the process of growing, one has to make substantial investments. And in the process, naturally, you need to raise funds from the private market. So the question is to find innovative solutions for those funding possibilities. And also in the process, doing the proper due diligence with regard to the commercial viability of those projects. Well, you know, say for example, we in Hong Kong, we try to help jurisdictions in the global south to securitize some of their brownfield infrastructure projects so that the funds can be channeled back to invest into green projects. Altogether, we have done 2 deals in the past couple of months, releasing about $700 million to be channeled back to new projects. So
in the global south in particular?
Oh yeah, that includes even jurisdictions in Latin America, Chile. Yeah.
Fantastic. Mohammed, great to have you with us. Thank you. I've been spying on you. You've been doing a lot of interesting things. You've invested in Albania, Latvia, Croatia, and then Indonesia. Yes. And I heard that you were in Madagascar, yes, not on holiday, but doing something else. Is there something you want to tell us about your next investment there?
Well, when I first went to Albania, of course, I was not sure, but everybody was telling me that there are criminals on the streets and all that. And I said, yeah, don't go to Albania. Let me finish my deal and then you come in. So, yeah, I'm lucky enough that I get good advice. I go to interesting places. Yeah, I think Madagascar is probably the next new thing in my life.
So you're not denying it, there's going to be an investment?
No, it's going to be very big also.
Breaking news at FII, ladies and gentlemen. Round of applause for Mr. Alaba.
But you know, but I really would like to comment on something you said. You said dominance, you know, the West dominance. And the truth is that we want everyone to grow. We want the West to grow, we want the East to grow, we want the North to grow, because you know we live in a very little place called Earth. But unfortunately, the West is suffering, and the suffering in the West is that the South, they are more disciplined people. They're younger people. The North are older people. Yeah. I think the North, or the West, you call it Northwest, I think democracy have gone too far, where, you know, I mean, the young, educated, hard worker, disciplined global South is productive, and the North, and I operate in the North, you know, they're quite busy with this complex democracy, and I think the amount of time spent in the North and the West on interesting things like, you know, LGBT or women's right. I mean, like, what about the 90%? You know, like nobody talks about, in the West, nobody talks about the 90% or the 95%, but so much focus on LGBT and all the other.
So you're saying the West is distracted with things that don't...
I think the bureaucracy is getting complicated. Democracy have gone too far, while debt have gone too far as well, right? But I think the where we are.
So what's the alternative if democracy has gone too far?
I don't know, but I think maybe we should go back to the Roman times. You know,
Roman times.
They don't allow everybody to vote. Only eligible, smart, capable, educated people vote. Not everybody votes. But nowadays with social media, manipulation, fighting between political parties, I think the global South is learning that this type of democracy will destroy their countries. So I think they're becoming smarter. They're learning from what they see. But I think the global South, as I said, are younger, more educated, hard worker, disciplined. They understand technology, while the other party, we want them to succeed. I mean, imagine if we don't have successful America. It's dangerous for the world not to have a successful America. But then again, how's the politics going? I mean, I have a home in Beverly Hills, and my kids don't want to go there because they say it's dangerous. I mean, this is not nice. This
I know,
is
and
kind of
it's so
gone like this. I don't know
multifaceted
the
what you
solution,
say.
but I'm just saying they're smarter people. They talk about the AI in America and all that stuff. Let them go fix it. Come on, we all live in a very small place, no?
I mean, you raise so many issues because you're looking at the political environment, the notion of democracy, whether that is going to help boost growth, the role of the
And
the
is
global
dominance,
south.
this business of somebody should dominate somebody, is this something that you
But
guys
it has happened whether we like
should
it or
stop
not.
this dominance business?
Indeed, and I think that's why there's a big question, and it's a good one. There's a big, by the way, now we all saw the BRICS summit wrapping up in Russia, and everyone is afraid after that family photo with the BRICS plus countries, the actual BRICS partners, what it means that Russia isn't so isolated and so forth. We can mention a plethora of things. But the ultimate message that it's sending is the global south is here, it has got a voice, and there is an investment opportunity. There is an argument for investment, but I think a lot of people are looking at this and saying, is this trying to get rid of the Western side of things? And I see, Katie, you want to jump in on this. No, you're just nodding. Now you got yourself into this.
Yeah.
So you've got a fund. You're investing a lot in the Global South. But tell me about these macro issues, how you guys are viewing it from your firm in Los Angeles.
Sure. So just by way of brief background, I have the privilege of leading TCW. We're a global asset manager, $200 billion, manage private credit, public credit, and equities. In the public credit space, we've managed emerging, I think this is why I'm on the panel. We've managed emerging markets pretty much as long as anybody in the space. And we've had the great privilege of managing assets on behalf of clients in this region and in this country for a long period of time. It's been a very great asset class for us over the long term from a beta and from an alpha perspective. So delighted to be here. This is my favorite country in the Global South, other than the ones represented on this panel, because I want to compliment all my panelists.
Yeah.
And then you asked the question, I want to give you a sense of what I think if any in this audience, given that we're capital allocators, you probably care how we're allocating capital in emerging markets debt. And I'll just end by saying something about how we allocate in the Global South and maybe a country that we are excited about that's not on other people's radars. You made this comment at the outset, I want to emphasize this. The Global South already is a massive contributor to global growth, so people probably understand this, but in 1990 it contributed 20% to global growth. Today the number's over 40%, so we've already seen a massive contribution. And in the next couple of years, it's going to grow 1 or 2% more than the global average. So I just want to give that balancing comment that there already is a lot of growth despite the challenges. And we are excited about this in the context of emerging markets. It's going to be supported by industrialization, by the leapfrogging of technology, by greater infrastructure, which Bayo is a world expert at, so I'll let him unpack that, and better demographics. And so we're quite optimistic on the outlook for that. Other themes are that people need to diversify their energy sources. Many of these countries can be beneficiaries of that. It's the greenification of the economy.
Yeah.
Many of these countries can be the beneficiaries of that. And I'll end by saying, countries just that we allocate capital to that not everybody's thinking about, I'll put one out there, which is Zambia, which obviously is in Africa. They have a goal to triple their copper production by over the next 5 years. The constraining factor has been power. 85% of their power is hydro, and they've had a drought, but they're diversifying their power sources, and we think they're going to be successful at that. And then I'll last comment, Guyana, which many of you may be familiar with, is actually the fastest growing country in the world, one that we're tracking really closely in South America. It's going to grow 40% this year, another thing not on people's radar. Unfortunately, they don't have a debt market yet. When you're growing that fast, you don't need a lot of debt, but we are building relationships and going there and expect in the future to add capital. So we think emerging markets is a great strategic asset allocation. This region has actually been the most committed to emerging markets. While retail money has come in and out, there's a lot of sophisticated capital here that's been committed for the long haul that I think has served clients well, and I compliment everybody on that. The Global South will be a really important part of it. And within emerging markets, there's 70 countries. There's a lot of plurality to pick from. And I mentioned 2 that aren't on people's radar. So the opportunity set is deep.
So we have our avatar on standby wanting to ask our panelists a question. Let's listen in.
The Global South's share of world GDP surged from 19% in 1990 to 42% in 2022. Its rise challenges traditional economic power structures, especially those dominated by the global North and West.
It was like a statement.
Yeah.
By the way, apparently these AI bots kind of hallucinate as well. Do you know that? This is kind of the things that... So Adebayo, I want you to jump in here. And by the way, just adding to what our avatar said, you know, the Global South now accounts for 88% of the global population. That is where the growth is. That is where the investments are. You're focused on infrastructure. Tell me what the needs are right now and how you're able to plug those holes.
Well, look, it's very simple. We invest, you said we invested in infrastructure. And I've never been more excited than I am today about the opportunities in the Global South. Why do I say that? Because, look, when you invest, it's much easier to invest where there are tailwinds than where there are headwinds. When the Global South is going 2 or 3 times as fast as the North, you have the economic growth that's providing opportunities for you. But I think what has changed in the last 5, 10 years is the willingness to attract private capital into infrastructure. So we are big investors in Latin America, we're big investors in Mexico, we're big investors in Southeast Asia, we're investing in renewables, we own airports, we own power plants. So if you think about all of the huge trends that are going to drive economic activity over the next 5 years, decarbonization, well, the Global South actually has an excess share of the essential minerals for decarbonization. That creates opportunities. Energy security, again, whether it's the kingdom or Qatar, lots of natural resources that are critical to energy security. Digitization, we had Massa talk about AGI and ASI. The cheapest sources of energy are in the Global South, okay? So that creates an advantage for countries who want to take advantage of it, to build data centers, to power this artificial intelligence and the language models. So I think tremendous opportunities.
So let me
Why
ask
wouldn't
you
you be excited?
Let me ask you this. You've spoken about where you're investing, which sectors. Where are you not investing? And I want you to talk about jurisdictions. Which countries in the Global South will you not touch?
Well, there's some that are obvious. You're not going to invest in North Korea, right? We're not investors in, clearly we've never invested in Russia. We're not investors in Russia. We're not investors in Africa, but not because we don't think there are countries that are in Africa that are attractive. The reason we're not is when we invest, we're looking to deploy $1 billion, $2 billion of equity in each investment we make. And so there are not that many large opportunities in Africa. If there were, we would look for opportunities.
By the way, infrastructure deficits every single year in Africa is over $100 billion.
Yep.
I'm sure you'll find some projects there.
Well,
I'm rooting for Africa.
Yeah, exactly, yeah.
I have my own agenda. Sanjeev, I want you to jump in here. Let's talk about agriculture. We'll come to you. I want to talk about agriculture, and we know in the future we need arable land, we need food security, we need water, we need to stay warm and cool, obviously, in certain markets. There are certain things that are absolutely fundamental. How important is investment in agriculture and how the Global South can play that role?
I think it's a very important point that you've touched upon, because investment in agriculture in Africa, for example, where it's more than 50% of the arable land of the world, it's not only important for transformation of Africa, because 60% of the workforce is engaged in agriculture, but also for global food security, because food security is becoming a real challenge globally because of climate change. So it's absolutely essential and pivotal to do that. And I think that the good news is that, there are challenges doing it because, first of all, the basics as connectivity, physical infrastructure is minimal, is not there. So you cannot really access and reach the produce to the right places unless physical infrastructure is there. The second is, it's also possible, of course, they have the usual challenges of fragmented land holdings. They have this challenge of the wrong work practices, and soil conditions being very poor, water being inadequate, although there is water available under the ground. So multitude of challenges. So how do you deal with that? I think fortunately, there's a technology leapfrogging that's possible if you take a leaf out of what's happening in India with the public digital infrastructure, the agri-stack and the application layers that businesses are putting in place. I think that's a way to reach the farmers easily. And the other, I think, lesson that we can take out of India is that India also has fragmented land holdings. So how do you kind of organize the farmers in terms of farmer-producer organizations? You get some aggregation to be able to access them. But all these, of course, require investments in physical infrastructure, digital infrastructure, capacity building. So, and in some of the most challenged countries, these issues are the resources are not there. And there are also debt issues. So I think, during the last G20, India's presidency, I think two important things happened there. One is that European Union was incorporated within G20. I think getting a seat at the table hopefully will enable engagement to find creative solutions to some of these issues.
You mean African Union?
Sorry?
The African Union.
African Union, I'm sorry.
Yeah.
Sorry. Apologize for that.
Yeah, but it's really important because having the AU, by the way, look how long it took for the AU to have a seat at the table.
Yeah, and the other important development was that there was this whole agenda about reforming multilateral development institutions.
Yeah.
Both in terms of balance sheets and also how they would lend from things like blended financing and particularly in some of the economies that are under stress right now, how do you kind of create instruments to de-risk investments? Because ultimately, private capital will go where risks and rewards are commensurate. Otherwise, it's not going to go.
Yeah.
And private capital does need to go.
All right, I'm cognizant of time, so let's keep it short and sweet so we can get through another round of questions. Ricardo, I know that you are, and actually you corrected me backstage because I said you really like crypto, and you said, no, actually, it's Bitcoin. Only Bitcoin.
Yeah.
The reason that is significant is because we keep talking about the dollar being the dominant currency. Me coming from Africa, I know the difficulty in cross-border payments, always having to go through the US dollar. I just wonder about the current payment system we're seeing globally and whether that is going to change, whether the dominance of the dollar might change going forward. Keeping in mind we are in Saudi and the petrodollar is, the historical part of it.
We're obviously getting to the end of the dollar dominance era because they are debasing the currency at such a rate that it's not going to last too long. And that's why people like me who look at Bitcoin as a solid unit of value, of a store of value, is so important for us. Also, it's a system that is not subject to retaliatory measures that will leave you with nothing if you step on the wrong toes, So that's just one example of innovation that drives growth. I'm an entrepreneur.
And a solution for the global south, would you say?
Well, one of the main problems of the global south, I would say, is this terrible currency system that we have, which mostly is pegged to the dollar, but that occasionally gets even more abused than the dollar. And we have cases like Venezuela, Argentina, Cuba, and we can go on Zimbabwe, and we can go on and on and on about how currency has been debased. And that is a huge drag on growth because it decapitalizes everybody. It makes everybody poor. I know firsthand when I started working in my group 40 years ago, when I founded it, our exchange rate in Mexico was 3-to-1, and that was 20-to-1. And today, 42 years later, it's still 20-to-1, but 20,000 because they took out 3 companies. Right? So that's what I lived through, from 20 to 20,000.
Wow.
And I survived, so I'm pretty good at that.
You did. I have to tell you about me holding a $1 trillion Zimbabwean note, by the way, so I know all about inflation. I want to go to our avatar. We have a question. Yes, ma'am.
Despite its dominance, the US dollar's share of global currency reserves has declined from 70% in 2000 to 58% in 2022, suggesting a gradual erosion of its hegemony in international finance. Do the panelists think this trend will continue?
Mohammed.
I think there'll be more collaboration.
Yeah.
I think, people should not take it against the people who want to be part of BRICS. I think it's just another group. I think they will collaborate with other people. The dollar has a chance. I think other currencies should have a chance. Bitcoin should have a chance. But then let's take us back to the dominance.
But should it be the reserve currency of the world, and how does that affect the global south?
I don't know if that's relevant anymore. I don't know if the reserve currency of if you are printing this reserve currency of the world, is this the thing we want really?
Paul?
It seems to me that, well, you know, countries around the world try to manage their foreign exchanges when it comes to trading and trade settlement. And in that sense, a lot of jurisdictions want to trade in their own currency. So the challenge is how to create a system to take care of that. Say, for example, Hong Kong, along with Saudi Arabia and a few other jurisdictions, we have a Enbridge projects facilitating trade settlements. Trading transactions denominated in their own local currency. And through digitalization, this can be settled by using their own currency. And this is gaining increasing confidence and increasing interest. And this is a project, I think, worth pushing forward for the good of everybody. If I may, I want to go back a little to the earlier question. I think the question you earlier asked, which jurisdiction one may exclude from investing, may not be the best question to ask, because it is always a question of risk and return. So it is very much depending also on the focus of investments of the fund or the appetite or focus of the specific investor. So the more relevant question perhaps should be which particular theme of investment in the coming decade and which are the geographic areas or jurisdictions one would be more interested to cast their investments. And I would argue that digitalization and green must be the theme for the coming years, particularly climate-related investments. There are tremendous gaps, and this would be very rewarding investments for global investors. The question is how to make sure those investments are going to the right projects and including green transition rather than facilitating greenwashing. So I think international understanding and cooperation on the proper green standards, proper reporting standards are important. And we in Hong Kong are contributing on that. And aside from that must be digitalization. FinTech, for example, in financial services. The Enbridge project I mentioned is just one example. There are a lot that can be done to make financial services more accessible, more inclusive, so that everyone can enjoy the benefit of the advance in financial services. I think that is the next question that we have to address, particularly to the relatively developing countries.
And it's such an important point that you make, Paul, because at the end of the day, a lot of the global south and actually emerging markets have not industrialized fully yet, and that's going to be a burden on what we talk about in terms of climate change agenda. How can we leapfrog certain technologies? So to end off, we've got a few minutes left. I'm going to go through everyone, and then Mohammed, I'm ending with you because I have an important question. I'm not letting go what you said earlier about the Roman times. Ricardo.
I'm sure the people in Silicon Valley have better solutions on how this democracy should work.
Yeah.
And we don't end up with failing Europe. And soon, I hope, not failing USA. I mean, it's like, can you provide security for my expensive neighborhood where I pay a lot of taxes? Like, what can we do?
Wait, I know. Okay, you've got a few minutes to think about that. Ricardo, I want to start with you. The most exciting technologies and investments that you're looking at right now, that Mexico is focused on right now, and then we're going to go through to all the other delegates.
Well, I could go on and on about technology, but I want to go back to jurisdiction because I think it is critically important to have the right jurisdiction. I mean, as a businessman, you work hard to make your capital, and then you want to look at where you're going to invest it, and you don't want to be expropriated or deposed of your capital somehow. So jurisdiction is critically important.
So you need stability and you need democracy?
Yes. So my country, for example, Mexico, we were a one-party state for 85 years. In the year 2000, we elected the first opposition president and became democratic.
Yeah.
So we had a huge, how do you say, disappointment because nothing happened and everything continued the same. And now we just had an election and we're back to the one-party state. There you have it.
It's interesting, yes.
And now it's even worse because now it's a democratic tyranny where the majority dictates on top of the minority.
You know what I've learned is actually for the Global South to really propel and reach its ambitions and its targets is that policy continuity and stability is needed. It doesn't matter under which, what you name the politics, frankly. And I think that's important. Very quickly, Sanjeev, let me know what you're thinking.
Well, that's absolutely right. And if you look at the examples of where investments and progress has been good, it's been on account of good policies and stability in policies for sure. But I just also want to make a comment on this whole business about where to invest on technology. I think from a global south perspective, particularly countries that have not progressed enough, I think investment on public digital infrastructure is what is fundamental. If we look at the UPI system in India, and that's also being used for cross-border movements now, the transactions are more than the rest of the world together. That's how deep it has gone. And it's very economical. I think those are the kind of investments are very, very pivotal for Global South.
Adebayo, 30 seconds.
Look, what else do you expect me to say about infrastructure? Look at the major trends. Digitization, energy security, decarbonization, supply chain rearrangement. All are going to require huge amounts of capital investment. All are going to require huge amounts of investment.
But you need policy continuity. You
policy
need security.
continuity is a given, okay? It's a
Yeah.
given. Those are table stakes for investments. But those are the areas where I think are the most exciting.
Katie.
Well, I'm still kind of digesting the comment that the U.S. could no longer be the reserve currency. I think that might be one of the most important things set up here, or things to think about for people in this room, because it's an exorbitant privilege to be the world's reserve currency. And if someone's going to challenge it, and we thought for a while it would be some of the BRIC economies, you said at the outset, that hasn't happened yet. Maybe it is Bitcoin. But I have to tell you, as someone who manages a lot of treasuries, it's making me reflect on that being quite dislocating. The U.S. actually is running itself more like an emerging market. We lecture the world about a lot of things.
Republic like we used to be.
100 with 6% current account deficit as a percentage of GDP, which we grew during the period of economic expansion. Yeah. We are writing checks that we can't cash. All these things that we lectured emerging economies about, sent them to the IMF for, we're doing ourselves now. We call that an economic miracle. In France, they're calling that, they're in a fiscal crisis. So I think that's a very interesting comment. I don't know how it will play out in the bond market, but maybe that's why Treasury yields are rising now despite the Fed cutting rates, because that is a possibility that people think that could be threatened and the deficit's not sustainable.
You see that timer? Before I could go over, but now we've got an avatar that's going to stop me. So I'm going to steal 1 minute, Sophie. I hope you don't mind. Okay, Paul.
Yeah,
quickly.
thank you. Yeah, I'm kind of principle-based when it comes to decision-making. So in the choice of jurisdiction, I gather that what we are really looking at is an area with safe, stable environment, and government policy being consistent, transparent, and predictable. And applying this principle, I think in Global South, there are still a lot of jurisdictions we can deploy our capital. Even for those with less satisfactory environment, I think it is up to us to structure the deal so as to address and mitigate the concern, so that the investment is not just for financial return, it also be good for social impact for those jurisdictions that we are investing in, creating more value than just financial returns.
Mohammed, I'm giving you the last word.
Yeah, well, I keep telling you Silicon Valley. I really believe that to solve democracy, I think AI should select the right person to rule in every country. And with my respect, to the U.S. Constitution, this U.S. Constitution is such an old-fashioned, written, 300, 400 years ago. Like, I update my phone every 3 weeks. This is Constitution.
But look at how it works. I mean, we've seen how much growth because of
why
democracy.
Is this thing so old? But I want to say one thing. I think AI knows how often you call your mom, knows if you pay your debt or not, you know what you do on Facebook, knows what you do on YouTube, knows what books you read, knows how good you are to your wife and your children, knows if you pay your loan on time, and say, this girl is the greatest president, forget about everything. The rest is all window dressing. It's all a show, right? All these marketing, it's a show.
Okay, Sophie's going to come out and shout at us for going over time, but Mohammed, what a way to end this panel. So
Yes.
thank you from the bottom of my heart for injecting energy into this. Ladies and gentlemen, my fantastic Global South panel, thank you so much. I'd like to welcome the one and only Richard Grest back on stage. Please come through.
Hello. Very nice to see you. Very good to see you. Very good to see you.
I don't know.
All right.
Let me sit down here. Oh, shit. Thank you. We need men to protect us for this. Because...
Choose your seat, ladies and gentlemen. All right. Will public or private markets shape the future of global investment? Now, before we discuss this, we have to be very careful. Because I know the panelists are all going to devolve to the lowest common denominator. Will public or private markets shape the future of global investment? You're all going to say, no, it's not one, it's the other. We need both. We need a bit of, aren't you?
Probably.
Aren't you? Mary Hudson, you're CEO of Asset and Wealth Management at JP Morgan. That's what you're going to tell me. It's not one, it's not the other, it's both.
But it is.
Well, then we'll just go back and have a cup of tea. What's the challenge with that? By the way, we've also got Roger Crandall of MassMutual, Bill Ford of General Atlantic, Dame Julia Hoggett of the London Stock Exchange. Julia. We have Ken Moelis of Moelis & Co. and Carlson Tong, the chairman of the Hong Kong Exchanges, Hong Kong. So, accepting that you're all going to tell me it's a bit of both, let's start with where you think the primary investment opportunity lies.
Well, the primary investment opportunity, as we all know, is still the public markets. And that's the most liquid, deepest access to companies all around the world. But just let's ground ourselves in what's happened to the US public markets as a for instance. There used to be 7,300 public companies back at the height in 1996, and today there's 4,300. So we've dropped by 40% over the course of 30 years. In the meantime, private equity has grown sixfold over the course of 20 years, and private credit has grown fivefold in the course of just 10 years. So you have a complete shift in the things that are available to invest in. And the question is, do you have access to invest in those markets? Is it appropriate for you to invest in those markets? And can you sustain any periods of illiquidity, because you're sacrificing liquidity in order to get access to these markets, which can provide great returns if done in the right hands, but you have to make sure you can weather through those times.
When you look at that, Bill, that number, that dramatic shift in the reduction of number of public companies, what do you take from it?
I think it's concerning because it is the primary source of opportunity for investors is to be in the public markets, despite the growth in the private markets. But just, I wanted to pick on one thing that Mary said that I think is important, is this point about liquidity, illiquidity. The public markets offer liquidity, and that's why we need it, and investors need it. And the private markets need to offer excess return or alpha to justify the illiquidity that they have. And we've always thought you need 400, 500, 600 basis points of premium performance to justify the illiquidity in the private markets. And that's what we've tried to do. I think the asset class has delivered that, and that's why, as Mary said, we've seen significant growth. But we absolutely need a public market because it's not a replacement for it, the private markets.
So what is the difference, in your view, in the duties that each provides?
Well, I think in the case of private markets, it's really what generates alpha. And I think it comes from industry insight, deal acumen, company building skills. And it's the firms in that area that have to apply those skills and get them ready to be public companies on the London Stock Exchange, the Hong Kong Stock Exchange, and then be available to a broader set of investors, institutions and retail investors. So that's really the job of the private markets.
Well, I want to say, first of all, I went public 10 years ago. I was a private company. Probably this, we were talking about it before. I said this is probably the single greatest day of my life. There's nothing that demonstrates capitalism like watching your stock open on the New York Stock Exchange, liquidity. I brought my family, my kids. It was the greatest day in their lives. So just all the entrepreneurs out here are thinking about it and are being told it's terrible. It's fantastic, number one. But number two, what's happened that Mary was talking about, we have all these agencies now that are trying to tell you how to run your company. ISS tells me who I can have on my board. So there's how I can get compensated. You have to go to consultants. So you go private and you have all this dynamic opportunity. I think that we've regulated the public market out of existence, 7,000 down to 4,000, because who wants ISS telling you who your directors should be and what age they have to be and what your disclosure has to be. I think I have a mine safety disclosure. We're an investment bank. I have to disclose our mine safety procedures. It's not really relevant, I mean, for those who ever worked in an investment bank. So these outside influences that are over-regulating the public markets are squeezing the life out of them.
So you haven't decided to go private?
The trouble is I love being public. It is...
Why?
Why? Instant access to liquidity. The markets, by the way, if you're running a company, I think the market speaks to you. You have to listen to it every day, but it'll tell you whether they like what you're doing and they don't like what you're doing. And by the way, as a group, they're smart. The general market has an influence, and they'll let you know whether they think you're on the right track. And it's good information to have. It's really, I think it's good input.
So we've only been private for 173 years, and we're owned by our policyholders. And I have no interest in going public whatsoever.
How often does the debate come up?
Zero, right? Because the alignment of interests with the long-term nature of our policyholders is so great compared to stockholders who may have a short-term desire. 0.5% of extra interest in our bond portfolio by investing in illiquid private bonds is worth 40% more in accumulated value after someone's lifetime. That's a great thing, and we can do that because we're matching illiquid assets with illiquid liabilities. So there's a place for private companies for the long term as well, and from an investment perspective, a lot of lending is done by private companies. So we're largely talking about this in the context of equities, and I agree being public is great. And I think the ability for ordinary people to own the greatest companies in the world in small amounts is an amazing triumph of capitalism. But we love being a private company for the long term.
But Bill needs both. Bill needs to be able to find the private company and then be able to take it public in the public markets for liquidity.
Right, so we have beaten up on both of you, or at least they have. You're old-fashioned, you're sclerotic, you're over-regulated, and there's far too much. Julia, why are they wrong?
To me with that, thank you.
Well, we'll come to you next. But
No.
Julia, why are they wrong?
Well, I think that there are certain points I absolutely agree with Ken on, actually, which is we've had a mindset, I think, in the UK that we have sought to so protect people from the downside that we haven't exposed them to the upside. And one of the challenges in regulating kind of one regulation for every different investment scenario is that you wind up everybody being in the same bucket or being constrained by the same things. The simple reality is that we need a world, and I'm afraid it is answering both sides of your question, that enables private companies to thrive and that entrepreneurship and that curation and that company building to happen, and to happen in the way that is the best to coach a CEO as to how to build a consequential company. But we then need to make sure they've got numerous courses of exit. Now, one of the things I care about, I chair a task force for the UK that has a very simple vision statement. How do we create the best possible environment in the UK for great companies to start here, grow here, scale here, and stay here? Now, to do that, you need private and public. We have incentivized all of our institutions to buy public and less incentivized them to buy private, which is why, I mean, Bill's had great pickings, but it's why we've not had as much of our private money coming in. In order to actually solve that, you need to think differently about the problem statement. It isn't about, I think, CEOs of exchanges going, boo, hiss, private markets are bad. What we've done at the London Stock Exchange is set ourselves a very simple target. We want to be the first exchange in the world that is genuinely indifferent as to whether a company is public or private.
You want to be?
Mm-hmm.
So you're not yet?
Well, I need the regulation to go through in the summer of next year.
Oh, the regulation. We'll come to you in just one second. Yes, sir. She's going to be the first, by the way.
Oh, right. Oh, good. Now, being the chairman of the Hong Kong Stock Exchange, which is the public market in Hong Kong, you will think that I'm slightly biased. I'll be forgiven to be slightly biased towards public markets, right?
Well, I would hope so, since you're running one.
Yes, that's right. And I think you probably have to ask yourself, why is that the private markets has grown so much? I think it's the low interest rate environment, the abundance of liquidity, and also the desire to seek high return. I think those are the major reasons why the private markets has gone so strong. But let's look at what are the difference between the private market and the public market. The public market has got far more stakeholders. So I think the public markets have to answer to regulators, to shareholders, to community, to employees. So that's a big difference between the two.
But yes and no. Yes, go ahead.
No, I just was going to jump in because that's exactly right. But the reality is that if you don't have to look at your portfolio every day, every hour, because you're not in need of making a decision of needing liquidity, you're much better off in private equity holdings or private credit holdings that don't have day-to-day mark-to-market values. You will make better long-term decisions.
When you say you will make...
You, the investor.
Right, but what sort of investor? Are we talking institutional, pension fund? Are you talking...
Today, it's everybody. Today, it's everybody. We have a term called AIQP, okay, which allows smaller investors to be able to invest in private equity, private credit, anything private. That rule was established back in the 1980s, and it said you had to have $200,000 US dollars of income or $1 million of net worth. That rule hasn't changed since the 80s. Inflation adjusted, that's now a $3 million, $500,000, but that hasn't changed. So all you need is the $200,000 in income and $1 million in net worth, and you can access these markets, which will probably allow you to make better long-term decisions for a portion of your portfolio that you shouldn't have to want to sell every day.
How many of your your clients would you say take advantage of investing in?
Well, we try and get as many as possible who can sustain the fact that they can't have access to 100% of their portfolio on a daily basis if they don't need it, because it's better for them long term.
What sort of differential of gains have you seen between those investments?
Well, it's what Bill said. First, you take away the liquidity premium you're paying.
Right.
So call that 100 basis points, 200 basis points, depends on the market. And then you find someone in this room who will manage your private investments in a very smart way, and they will add alpha, and it can be 200 basis points in a bad year, it can be 500 basis points in a good year, and now you're talking real compounded returns, and that's why the stakeholders at the end of the insurance policies are getting so much more in their balances, which allows them to retire better. And that's, at the end of the day, every asset manager's goal is to make sure that the end amount of money that the person has is better with them than had it been done on their own, which people usually make human decisions, and they tend to sell at the wrong time and buy at the wrong time.
Surely not.
Oftentimes.
I find that hard to believe.
I just want to tie something that Mary said to what Ken said, and that we've watched over many, many years, which is the 7,000 companies to 4,000. I think it is tied to overregulation. It's why companies are choosing not to go public, and they're waiting to a much higher level of valuation to go public. And now that opens up the private markets for us. We've got more opportunity to invest in high-quality private companies because they're waiting longer to go public. We still want and need the public markets because we need to deliver liquidity ultimately for our investors, Mary's clients. But they're waiting a lot longer to get there because of, again, the regulatory point.
And look, this is the rationale for the strategic reset that we've taken at the exchange. But I think it is an important thing. When you're looking at that delta of 7,000 to 4,000, the public markets have to ask themselves that question. They have to ask themselves, what have they done when they had all of that right ingredients, all the ingredients Ken was going into, and they still have a huge number of them. But I think the question is, the public markets have to look at themselves and go, what is my value?
That's you.
Well, I don't write most of the regulations for most of the public markets, but that's exactly what we are doing in the UK. So we're looking at everything from our listing rules, the demands on corporate governance, the demands on disclosure, the risk appetite in the country, and the creation of a crossover market. We're looking at all of those things to look at that reset. And I think it's an important debate to have. It sounds like an unusual thing for the CEO of an exchange to say, but I think we have to look at ourselves and say the world and the global economy works best when you have a very synchronistic relationship between the private and public markets. Each play their part, but the public markets have to make sure they are something that can take and are attractive to those private companies that Bill's curating.
I think what you have to ask yourself is that what's the purpose of the market? Is it just shareholders' return? Or should we consider other societal benefits? Because the market is obviously to allow companies to have access to funding, to market variation, to liquidity. But I mean, I would like to ask, does CEO have a greater responsibility more than shareholders' return?
So, hang on, you've taken us down a road,
yes,
which is a little... what would you suggest is the wider societal role of the public market outside of the narrow definition of the liquidity raising of companies?
That's correct.
So what is it?
What is it? It's inclusiveness,
Of
diversity.
What? Well, hang on, of what?
Roger said it before. It actually reinforces capitalism, because when the public sees companies go from inception to growth, being public, and then the wide public being able to participate in that growth. Think Apple over 40 years of being public. The public's been able to participate in that. That reinforces the whole notion of free markets.
And Mary made the point, actually. It's a democratizing force. You know, the best way is people feel that they've got a stake, whether it's in your 401k or in a pension in the UK or wherever else, you've got a stake in the success in society. The definition in the US means that in private company investment, you don't quite yet for everybody.
Okay, so before I come to you again, I am old enough to remember Sid.
Yes, so am I.
Right? There'll be a couple of people here who will remember. Sid was part of the UK's privatisation in the 1980s under the Thatcher government. And I was British Telecom, I believe, that started it.
Sid. British Gas and British Telecom, yeah.
Right. Sid was the one who was going to be there.
Psst, pass it along, tell Sid about buying these shares.
That's right. Now, that was the way, that was the way in which supposedly there was going to be the democratisation of shareholding in the UK. Did it work?
Well, I'll make possibly a Ken point again. I'm not calling them all regulation points Ken points, but Telsid would be illegal under the financial promotions regime in the UK nowadays. So that tells you something about how far we've come. I actually do think, yes, it had a big impact on giving people a sense that they could have a stake in companies. In certain jurisdictions, we have actually made it harder and harder for retail to participate in our markets. We've made it easier for them to access cryptocurrencies and harder for them to access things that are actually real economic assets. And so that is a question about how we make sure regulators get the balance right.
So you were saying about democratization. I think the big thing that's going on between public to private is credit. And it's the undemocratization of risk that's happening, and I think that's very good for society. So what the regulators have learned in the SVB, Credit Suisse, is that there already was $22 trillion of private credit. It was just all bank debt. But it was financed in the most ridiculous way. You had 5-year loans, and what we found out is we had 5-second liquidity. That's a bad system. You can remove your money in 5 seconds, and the bank had 5-year loans. And the intermediary of that, helping to leverage it 10-to-1, was the taxpayer, was the guarantee on FDIC deposits. This is what's leading to the boom in private credit, which is really the capital that you're talking about, is that if you could take this capital off of bank balance sheets, risky capital, take the taxpayer out of guaranteeing bad decision-making, which, by the way, seems to recur. It does not seem to be just Lehman and Bear. It seems to happen every 10 years. You find out that somebody's made horrific loans.
Well, SNL crisis, we've all been,
So the rise of private credit is an unbelievably good thing for markets, for societies. The individual now who makes the loan, maybe they're one-to-one leverage, but if an institution loses their money, fine. Get the taxpayer out of it, and I think you'll have a much better society.
I mean, I don't disagree with that. I think that public markets and private markets can coexist, and they need to compete with each other, because I think public companies can learn to improve themselves as well. And then I think regulators can learn from it, because I think there is a risk that you might overregulate, and that's important.
Is there a feeling, Mary, that when it comes to private markets, even though pension funds and the like access in a sense, but there's a feeling with private equity, JV, all of these private things that the ordinary person's left out. That somehow it is those with money having access to those opportunities and funds, and guess what? They're all at it again.
That is how it used to be. It's changing. And the good news is that we have all these things that are providing more access for people to be able to put this in mutual funds. We can now put privates in up to 10% of mutual funds. We have evergreen funds that we can do, and now we're even starting to put them in ETFs, which are daily traded ETFs. And if we get what you're trying to do, which is be able to more liquefy the private markets on the LSE as a for instance, now you really bridge that gap where almost anyone can have that access.
That access, Roger, is crucial in a sense, because if the markets, public or private, are going to enjoy, for want of a better word, societal support, there has to be a feeling of entrance.
Yeah. So look, as the fixed income guy here who's kind of doing the lending, I kind of want to point out that capital getting from all around the world to bring to companies, in many cases smaller and mid-sized companies that have been the driver of job growth, for example, in the United States and around the world, is a very positive thing. And that incremental yield that starts with an institutional investor getting access to significant information. I have much more information about my private portfolio than I do about my public portfolio on the debt side, right? Because I can actually get monthly financials. I can talk to management. Might have covenants that provide protections but also help us monitor the business. That gets passed through to someone who's buying a $50,000 annuity at a JP Morgan branch, in New York, right? And gets them a higher yield. And that higher yield allows them to ultimately accumulate more money. So it's a very virtuous kind of cycle here. Again, I think when we talk about this, it's really important to remember that most lending is actually private lending. And this breadth of capital coming to these private markets actually makes a more resilient financial system, and that is a real positive.
But does Sid believe that Sid is getting a fair crack at the whip, or that though Sid being the individual investor, who always feels, I mean, even, let's forget day traders and momentum trading and all that, just the ordinary person who sees their portfolio not going up by as much.
Boys, who's an investor in your life insurance?
Again, our 7 million policyholders are
right.
very much ordinary folks.
Right.
And again, today, through a variety of things, whether it's a perpetual interval fund that's offered to accredited investors, whether it's a business development company that's publicly traded, whether it's the opportunity, hopefully, to be able to buy smaller lots on an exchange like you're talking about, getting that access is really important. Does everybody feel like they're getting a fair shake? No one ever feels like they're getting a fair shake, right? That's just the way people are, right? But what's happening is we're actually connecting more people, and that's a positive thing.
But I think the way to connect this is going back to Sid till now. It's the great banks and the great insurance companies that have democratized access to private markets.
Right.
When Sid was around back then, you're right, there wasn't ways for the individual investor, even the high net worth investor, to access private market. That's changed dramatically. And again, it's really the banks and the insurance companies that have made that happen.
On the company front, I just want to talk to you, Julie, about this idea, which is relatively new, but you believe is going to become much more, and I was listening this morning to the CEO of Franklin saying the same thing. This idea of public companies moving between public and private and back to public again, depending upon their particular position of development. In the past, when a public company's gone private, we've always thought there was either something weird going on, a rich person's game going on, or it'll all end in tears.
Well, the logic for PISES, which stands for the Private Intermittent Securities and Capital Exchange System Regulation, but the R is silent.
Good, you shortened it.
Yeah, I know. But PISES basically provides the opportunity for a private company to have an auction of their secondary shares at a periodicity of their choosing. So it gives a transparent price formation process for angel and seed investors to get out. It gives the ability for institutions to start following companies prior to the IPO. It gives the ability for VCs and PEs to have another exit strategy that doesn't force a trade sale or an IPO based on their liquidity dynamics, not the strategic dynamics of the company. And it provides the opportunity, if the company wants to provide liquidity for staff. All of it can be done intermediated through advisors and banks and everybody else. So it's using the existing system, the existing pipes and plumbing, but it's designed to resolve the valley of death problem, but also to democratize that. But our view in the UK is the idea that a company could move up that scale or down that scale.
I could make an argument that would say a better solution is that investors grow up and realize that sometimes companies are beyond the quarterly reporting season. I mean, we were talking about this with AI earlier. Yeah. You know, everyone sort of says NVIDIA gently says, well, it might take a little bit longer than we originally thought. And everybody childishly falls out of bed.
Well, one of my visions, I have to say, for this ability to have a funding continuum is that you have institutional investors having to have that long-term view because they're now holding more of these private companies in their portfolio, seeing what consequential business building looks like through that lens, and learning to have patience in management before they become public. That doesn't mean everybody will, but it is a hope that you could shift that dynamic somewhat.
Is it workable?
Yes. In fact, let me, just where we're sitting. Aramco doing their IPO here, I think it was now 5 years ago, ignited the Tadawal, ignited a capital source for Saudi Arabia. I'm going to say something, but I'm not positive, but they might be the #2 IPO country in the world as of right now. By the way, given the way the US is, I wouldn't doubt that they're #1. But the amount of liquidity for growth, for capital, for families who've had, for family transition, to create growth capital inside the market. And it's on fire, by the way. We're activated, and the fact is you could see the local market wants to invest in regional companies that are doing great, and you can sense the positive reinforcement, the positive circular virtuous cycle going on. And this is what happens when you have an exciting market, high growth, and capital that needs to flow in, and businesses that want the capital for growth.
Ken's exactly right. So JP Morgan is highly involved in most of these IPOs around the world. And there used to be 100 a year. Back in 2021, there was 100 a year. 2022, there was 8. So this year, things are looking a little bit better, but there's only been 33. And
what do you attribute that to?
We're almost in November. It's a lot of what we've been talking about. There's stay private longer, if you can. The regulations, the activists, the quarterly obsession, all of that. If all else equal, you are a CEO, stay private a little bit longer until you're ready, as Ken was. He didn't go public right away. He waited until it was institutionalized, it was ready to go. And then you can sustain that. But until then, the markets are readjusting. And there are places like right here, where we're sitting in Saudi Arabia, where there's a lot of activity and it's in a different generation. And so you're seeing the excitement here, and this is exactly where the shift of focus has become.
What can be done to change the environment then? Start with you.
Well, I want to go right back to the regulatory side, because when I talk to CEOs, particularly of smaller and mid-sized companies, they say the cost of being public is high, and it's too high for the benefits I get. You know, the other is public markets are the crucible where fear and greed run into changing expectations. I love public markets, and I love volatility, because as a predominantly long-term private market investor, that breeds opportunity over time. Right, we just heard how in 2000 the internet bubble burst and companies fell 99%. That was a public market bubble and a crash, but guess what? What came was the best after that. So recognizing that fear and greed are going to be causing these kind of moves, public markets are always going to have these ins and outs. I'm very optimistic that the combination of the US election happening, the Fed ending the raising cycle at the short term of the curve, and reasonable valuations of public markets from both buyer and seller perspective, we could see a lot more activity in the next couple of years.
So as I finish, I have $1 million to give each of you. No, nothing to do with voting or registering. We wouldn't want to fall foul of that, would we?
No.
$1 million. You cannot split it up.
Uh-oh.
Oh, do you not think I didn't see that one coming? All right, all right. bearing in mind our friends from exchanges, I'll allow you to do a percentage. What percentage public, what percentage private? A million, what percentage?
Tell me your investment objectives and your liquidity needs. Can't answer the question otherwise.
That's called pleading the fifth.
70-30.
Which way?
70 public and 30 private.
If you get the return, I think liquidity is, if you get the return, why not be liquid? So I'd say you have to demonstrate some excess return to be private, so I'd go mostly public.
I'd say put it on Pisces.
I think it depends on your risk appetite.
Oh, for goodness sake, getting a straightforward answer.
I'm a conservative investor, so I would invest on companies which I think are safer, give high dividend yield, etc.
The answer is exactly these two. Our average institutional pension fund, sovereign wealth fund allocation to privates is about 10 to 12%, and our large family office and ultra high net worth client is somewhere in the 30 to 35% range. Those are the two answers.
Ladies and gentlemen, practical advice from the best, our panel.
Thank you very much.
It's so fun.
It's always such
In the name of Allah, the Beneficent, the Merciful, Your Royal Highness, Prince Mohammed bin Salman, the Crown Prince of the Kingdom of Saudi Arabia, the Chairman of the Ministers' Council, Your Excellencies, Your Highnesses, Your Excellencies, dear attendees, it is my pleasure in the beginning to communicate the heartfelt gratitude and thankfulness of President Assisi to the custodian of the two holy mosques, King Salman bin Abdulaziz Al Saud, and His Royal Highness, the Crown Prince, Prince Mohammed bin Salman. I'd like to express my thankfulness and gratitude for the kind invitation to attend the 8th edition of the Future Investment Initiative to communicate my speech on behalf of the President of the Egyptian Republic, the Arab Republic of Egypt. I'd like to seize the opportunity to express my gratitude and to congratulate you for the success of this initiative over the last few years in terms of attracting investments and shedding the light on the different efforts of development in Saudi Arabia in light of the realization of the targets and goals of the Saudi Vision 2030 that I personally am keen on following the achievements of its programs. Based on the oneness and the unity of the goal and destination of Egypt and Saudi Arabia. Dear attendees, this is an infinite horizon. Invest today, shape future. This expresses the important quality of the working opportunities that Saudi government is providing for the next generation, despite of the different risks and challenges based on the escalation that is happening in the Middle East and the polarization and instability in the region, in addition to what the world witnesses in terms of the difficult challenges that are facing all of us in terms of achieving sustainable development. For example, the COVID-19 pandemic and the scarcity of water and other food security issues. Despite of these challenges, Egypt is persistent on taking steady, fast steps to achieve prosperity for our country. In this light, Egypt is working relentlessly under the wise leadership of President Sisi on different pillars and themes. For example, enhancing the role of the private sector. Egypt gives more attention and more roles for the private sector in leading economic development and in achieving our national plans. The Egyptian government recently took various serious, ambitious steps in order to improve the environment and the climate of investment and to help investors overcome any obstacles. One of the most important steps is to provide a maximum limit for public investments to provide more opportunities for private investments, and also in order to stabilize the currency and the exchange rate, and also to continue with the government programs in the light of the government ownership programs, in addition to new investment opportunity that will simplify the taxes policies and unify the different tax collection revenues, and also a lot of reforms, including the new program for supporting exports, in addition to launching a new national strategy for industry that will aim at improving and creating new growth in national industry by attracting new opportunities and new investments in industries like EV industries. Secondly, the energy sector. There is no doubt that sustainable development of the future depends on energy, especially in light of the gap between the currently available energy sources and the needs and the demand for energy from the other side. That's why Egypt is working on enhancing sources of energy, enhancing and promoting its efficiency to be a hub for exporting energy by enhancing direct investments in this important sector, in addition to creating partnerships with our friend and sister countries, especially in the field of renewable and new energies. In this realms, it is my pleasure to be here to witness what is happening currently in terms of partnership between Egypt and Saudi Arabia in the fields, in the related fields related to energy and diversification of energy sources. It is worthy to be mentioned the electricity connection project between Egypt and Saudi Arabia that aims at producing more than 3,000 megawatts in 2 phases. Secondly, transportation and urban distribution program and urban development program. Egypt recently injected huge amount of money to build new cities and smart cities and to develop transportation and ports and all related projects in all of the country in line with the ambitious plans that we have in Egypt to benefit and to maximize our benefit from our strategic location. In this light, Egypt built more than 20 new cities, like the new administrational city and Al Alamein new city, that all of them follow the sustainable standards and technological advancement standards. We also established and created a new strategy for transportation to uplift the infrastructure for transportation by establishing and renewing and overhauling the river, sea and maritime transportation and new roads network. And we started the new strategic roadmap for maritime transportation. We have cooperation between Egypt and Saudi Arabia in the field of connecting our ports and linking our ports in order to be a regional hub for logistic transportation and supply chains. Fourth, telecommunications and IT, especially AI. It is no secret that fields of telecommunication and IT and its developments, including AI, have become the top priority for the fields that are motivating investments and industrial growth. This urged the government of Egypt to take quick steps in order to support this sector, which has become the fastest growing sector in Egypt. We are also in Egypt working on creating new projects in light of the Egypt digital platform to integrate telecommunication and IT technologies in all of the fields. It is also important for us to take care of our human factors in our development in order to consider it the main pillar for our strategy for developing information technology sector in line with the development of the infrastructure in Egypt, in addition to adding the factors of technology and digital in the precious life or the Al Hayah Karima project in Egypt in order to have a life with dignity by providing fiber optics connections to villages to provide millions of Egyptians, about 50% of the population of Egypt, with this service. Ladies and gentlemen, there is no doubt that there is close connection between economy, investments, and growth from one side, peace, stability, and security from the other side, which makes the Middle East region, which is full of conflicts and increasing difficulties, facing a lot of complicated threats. For example, the Israeli assault against our brothers in Gaza and the Western Bank, and also went through to include Lebanon in the last few weeks. Egypt and Saudi Arabia in these circumstances are the main pillars for stability and security in the region. There is no doubt that within this important circumstances that we are going through in the Middle East, taking in consideration the matching between the visions of the two countries regarding the seriousness of the current situation and the importance of ceasing fire and being important to avoid a comprehensive war that will be negatively affecting everyone without exceptions. In this light, I'd like to reiterate again that that the security of GCC countries is an integral part of the national security of Egypt, and achieving security, peace, and the feasible environment for welfare and economic prosperity in the Middle East of the world is closely connected to fair peace and just comprehensive peace in the region by establishing an independent Palestinian state with Eastern Jerusalem and its capital, according to the resolution of the international community. I also would like to express my gratitude for and cherishing the strategic partnership between Egypt and Saudi Arabia on all of the levels, which reflects the historical relations between the two countries and the two peoples. And I would like also to thank and to congratulate Saudi Arabia and commend them under the wise leadership of the custodian of the two holy mosques, King Salman bin Abdulaziz, and His Royal Highness, the Crown Prince Mohammed bin Salman, the Crown Prince and the head of and the chair of the Council of Ministers, because of their wise leadership to a lot of developments in all fields. And I'd like to affirm that Egypt is ready to partner in support of the vision. And I'd like to announce that Saudi Arabia is signing the agreement of encouraging the development of projects between the two countries and the creation of the Coordination Supreme Council between the two countries to enhance our investment partnership for higher levels. In conclusion, I would like to express my thankfulness and gratitude for the custodian of the two holy mosques and for His Royal Highness, the Crown Prince Mohammed bin Salman, the Crown Prince of Saudi Arabia and the chair of the Prime Minister of Saudi Arabia. And I hope that your contributions in the coming 2 days, providing more ideas, specific ideas for pushing limits of development and sustainability forward and achieving more peace and welfare for the Middle East and the whole world. Thank you very much, and peace be upon you all.
Your Excellency, thank you very much for joining us. And please, if I could ask you just to show your appreciation once again. Thank you. And in keeping with your appreciation, please put your hands together and welcome warmly His Excellency Mohammed Shahbaz Sharif, the Prime Minister of the Islamic Republic of Pakistan.
Bismillahirrahmanirrahim. Excellencies, honorable delegates, ladies and gentlemen, Assalamu alaikum and a very good afternoon. I would like to begin by expressing my deepest gratitude to custodian of the two holy mosques, His Majesty King Salman bin Abdulaziz Al Saud, and to His Royal Highness Mohammed bin Salman, Crown Prince and Prime Minister of Kingdom of Saudi Arabia, for their remarkable vision and foresight in convening this important gathering of world leaders, experts, and civil society to address issues shaping future of the world. I stand here in Riyadh, a city that has evolved from a desert oasis into a global metropolis, and I'm inspired by a vision that resonates beyond borders, a vision of limitless possibilities where the choices we make today set the course for a future we dream of. Ladies and gentlemen, I am elated to share that Pakistan too is on a transformative journey, a journey of resilience, sacrifice, and a relentless pursuit of stability and growth. Since assuming office in March this year, the progress and prosperity of my people has been my government's laser focus. Through the commitment of our people and valuable support of our partners like our brotherly country, Kingdom of Saudi Arabia, we have restored macroeconomic stability and are now ready to enter a period of sustained growth and progress. This journey is not just ours. It's a call to our friends across the world because together we are stronger. Together we can shape a future defined by innovation, prosperity, and progress. Ladies and gentlemen, Pakistan is blessed with something truly precious, that is our youth, Shabab. Our young generation is our promise to tomorrow, talented, resilient, and armed with untiring spirit. They are now ready to take on the emerging challenges. Inspired by Saudi Arabia's Vision 2030, championed by my very dear brother, Crown Prince Mohammed bin Salman, we share a common mission and invest in our youth to shape the future. In this pursuit, it is not just our responsibility, it is our persistent endeavor to empower our youth with quality education, digital inclusivity, and the cross-cutting tools that need to thrive in a rapidly evolving world. Pakistan is laying foundation for a knowledge-based economy driven by innovation in three pivotal domains: artificial intelligence, education, and health, in which we look forward to forging useful partnerships. My dear friends, artificial intelligence is more than a trend. It is a force revolutionizing economies, societies, and industries. At this critical juncture, Pakistan is not just embracing artificial intelligence, we are committed to excelling in it. Our mission is clear, and it is to encourage young minds to redefine the boundaries of AI, training skilled engineers and data scientists as the backbone of Pakistan's AI growth, and equipping our workforce to harness the power of AI across industries. Along with the Kingdom of Saudi Arabia and like-minded global partners, Pakistan envisions artificial intelligence as a force for good and free from biases. In agriculture, climate resilience, and the fight against misinformation, we can unleash AI's potential not merely to compete, but to uplift and empower. Esteemed delegates, our aspirations in AI and beyond are deeply rooted in a solid educational foundation. Through educational reforms, vocational trainings, and digital literacy, we aim to build a skilled, tech-savvy generation. Projects like Danish School, that is Intellect Schools, and the Education Endowment Fund in Pakistan that my government steered made quality education accessible to those who once saw it as an unattainable dream. Alhamdulillah, their dream has come true. Today, these young graduates aren't just students, they are great builders of tomorrow as doctors, engineers, and innovators. They are pioneers driving progress and uplifting their communities, a testament to the transformative power of accessible education. Their success stories reinforce my belief that education is a true equalizer and a game changer for individuals and nations alike. Distinguished guests, health is the cornerstone of human advancement, and Pakistan's healthcare sector is home to over 275,000 registered doctors, with our youth pioneering new health tech solutions. With advancements in healthcare standards, we envision a future where our doctors and scientists collaborate across borders for a healthier tomorrow. Imagine the impact of pooling resources in areas like genome sequencing and personalized medicine. With such collaborations, we can redefine the whole healthcare system. Our institutions in Pakistan, like King Edward Medical College, NUST, and Aga Khan University, hold immense potential for breakthroughs in diagnostics, treatment, and disease prevention. At Pakistan Kidney and Liver Institute Research Center, a center of excellence in specialized care and research, we are unrelenting in our commitment to providing state-of-the-art medical services to our people, which contributes to building a healthier, more resilient society. Ladies and gentlemen, as we look forward these infinite horizons and unpack our potential, one truth becomes abundantly clear, and that is the future of human advancement doesn't lie in isolation. It lies in collaboration, in working together for win-win outcomes. No nation can overcome today's challenges alone, and no single country can harness the potential of tomorrow without the support of others. Pakistan stands ready to join those countries who dare to dream big. It is my pleasure and honor to invite you to invest in Pakistan, to bring your expertise and experience to our country as we build a future rooted in resilience and shared prosperity. As Pakistan and Kingdom of Saudi Arabia move towards new realms of possibility, from our shared heritage to the frontiers of innovation, may this partnership shine as a beacon for all. Before I finish, ladies and gentlemen, this dream will never be fulfilled, come to its certainty and transformed into action unless peace is restored in Gaza and bloodshed is immediately stopped over there. Without that, world will not progress and will not prosper. Let this be our legacy, a commitment to our vision and transcend borders, embraces boundless potential and inspires generations to come. I thank you. God bless you.
Your Excellency, thank you very much. And once again, can you demonstrate your appreciation for His Excellency's remarks? Thank you. And I know that, at this time of the day, for most people, energy flags a little bit, but no need to worry. I think this next session you're going to thoroughly enjoy. So please, a very, very warm welcome to Dr. Peter Diamandis, founder and executive chairman of the X Prize Foundation. Peter?
Ladies and gentlemen, prepare for a fun conversation with a very special guest and someone I'm proud to call a friend. Welcome, Elon Musk. Elon, welcome to Riyadh. It's been quite an incredible 90 days for you, my friend. XAI Colossus came online in 122 days. You're about to double in size again. The extraordinary success of the 5th mission of Starship and the booster capture, amazing. The launch of Cybercab, Starlink helping in disaster relief, progress with Optimus, the second Neuralink human patient, new record users on X. And that's in 90 days. I'm sure I've missed a few things. Welcome.
Yeah, I've been playing a significant role in this election.
I think I saw you someplace on X dealing with election issues. Let's talk a little bit about AI, which is on the tips of everybody's conversations here. When we spoke last in March at the Abundance Summit, your prediction was that AI was increasing at a rate as fast as 100 times per year, and that by 2029 or 2030, we might see AI as capable as 8 billion humans. Are you still seeing that pace?
Yeah, I mean, it's difficult. It's a difficult thing to quantify exactly, but I certainly feel comfortable saying that it's getting 10 times better per year, which is, let's say it's, 4 years from now, that would mean 10,000 times better. So maybe 100,000. Yeah. And I think it will be able to do anything that any human can do. Possibly within the next year or two. And then it's what can it, how much longer than that does it take to be able to do what all humans can do combined? I think not long. Probably only, I don't know, 3 years from that point. So it like 2029-ish, 28, something like that.
The other conversation we've had, and you came out in the same side as Jeffrey Hinton in this, was 80% probability it's going to be awesome. 20% probability we're screwed. Are you still on those odds?
Yeah, I mean, one could say it's most likely going to be great, and there's some chance, which could be 10 to 20%, that it goes bad. The chance is not zero that it goes bad, but overall, one could say that the cup is 80% full. Is one positive way to look at it, maybe 90%.
All right, I like that, increasing odds. What keeps you What keeps you up at night besides running 6 companies?
Waking up early to participate in talks like this one.
I felt very guilty asking you to do this, but thank you for joining us nonetheless.
But in terms of worried about the future, well, I think AI is a significant existential threat and something we should be paying close attention to. it's probably the most significant near-term threat. The longer term than that is the global population collapse. You know, birth rates have been collapsing pretty much worldwide, and we're headed to a situation where, for example, based on current birth rates, South Korea would have about a third of its current population, perhaps much less. Europe would have about half of its current population, perhaps much less. And I should say those numbers are if the birth rate were suddenly to return to 2.1 per woman, which is a stability point, which it's not doing. So if the current compounding effect continues, you would see really many countries become 5% of their current size or less within 3 generations.
I know you've been doing your...
I would consider that to be a very big problem. And I think for most countries, they should view the birth rate as the single biggest problem they need to solve. I mean, if you don't make new humans, there's no humanity. And all the policies in the world don't matter.
I know you've been doing your part to maintain the birth rate in the U.S.
Yes, I am. I mean, you've got to walk the talk. So I do have a lot of kids, and I encourage others to have lots of kids.
But on the AI, and I'm sorry to go negative on this, but what are you doing right now that's most important for countering that 10% probability of dystopian outcomes? Is there something, or is there a regulation that you're promoting? How do you think about, the upside will take care of itself. How do you protect against the downside?
Well, my instinct with respect to AI safety is that you have to create a maximally truth-seeking AI, which may sound obvious, but that's what I'm seeing being produced is not maximally truth-seeking. It tends to be trained to be politically correct, and for a lot of the AIs that are being trained in the San Francisco Bay Area, they have taken on the philosophy of the people around them, which kind of makes sense. So you have sort of a woke, nihilistic, in my opinion, philosophy that is being built into these AIs, and they're being taught to say crazy things in some cases that are very troubling. Like when Google Gemini came out, people asked whether it is which is worse, misgendering Caitlyn Jenner or global thermonuclear war, and it said misgendering Caitlyn Jenner, which is obviously a problem because we'd all die in global thermonuclear war. And so if you have an AI that's programmed for things like that, it could conclude that the best way to ensure that nobody is misgendered is to annihilate all humans, thus making the probability of a future misgendering 0. That's highly problematic. So you really want to have a maximally truth-seeking AI, and I can't emphasize that enough. That's incredibly important. And obviously build an AI that loves humanity, and I think these. So I'm a little concerned. That's why I created XAI, which is to have an AI that is maximally truth-seeking, that aspirationally does love humanity, and will seek the best interests of humanity going forward.
You just tweeted that you're doubling the size of the Colossus cluster.
Yeah.
What are your thoughts?
We already have with XAI the most powerful training cluster in the world, and we're about to double it.
Energy is a point of conversation here. How concerned are you about providing sufficient energy for the growing hungry clusters globally?
Yeah, I think things are currently chip limited, or they're not quite chip limited. They're getting to the point where they're limited by voltage transformers and installation, and they will become limited by energy. So there will be a tremendous amount of energy that's needed for digital intelligence and for also for electrification of transport. So those two things are a big deal. Yeah, we're going to need a lot of energy. The long term, almost all the energy that we will get is going to come from the sun. So one way to look at civilization is progress on the Kardashev scale.
We're just barely getting to 1.
Well, we're far from,
okay,
from
half.
getting. I think we might be close. We might. I'm not. It's not clear to me we're above 1% on the Kardashev scale 1. Because Kardashev scale 1 means you've harnessed all the power of a planet. I think we've probably harnessed less than 1% of the power of Earth. Now, Kardashev scale 2 is you've harnessed all the power of your sun. The sun is overwhelmingly the largest source of energy in the solar system. Everything else is maybe amounts to about 1 trillionth of the energy in the solar system compared to the sun. Safely less than 1 trillionth of all the energy is non-sun in our solar system.
Yeah, we're using 1/8,000th of the sun's energy hits the surface of the Earth.
Just that hits the surface of the Earth.
Yeah.
Yes. And the percentage of the sun's energy that hits the surface of the Earth is less than 1 trillionth of the energy that the sun produces. So almost all energy long term will be solar. It rounds up to 100%. So it rounds up to 100%. That's how much of the energy in the future will be solar. When you view things from a Kardashev standpoint.
You know, Elon, we have a number of national leaders, corporate financial leaders from the Middle East here. What's your advice to decision makers here in the room that don't want to miss the AI transformation and will be part of the leadership of that AI transformation? Do they need to build their own clusters here? Are they partnering?
Yeah, I think there's probably all countries will have their own AI clusters over time. It's currently very difficult to actually build an AI cluster and have it run. It's not like just pulling a computer out of a box. They are currently very difficult to run. And you have to say, are you going to be training a frontier model? Because if you're training a frontier model, then you need a massive amount of compute and a level of technical skill that is only a few companies possess. But over time, I think every country will have AI compute clusters. It's just going to be a normal thing that every country has. So, yeah.
So basic infrastructure for every nation, like they have an electrical grid.
Yeah, it'll be something like electricity, or having an airline or something like that. It's every country will have AIs or multiple AIs. So, and there will be a lot of robots.
There'll be a lot of robots. But we had
way more robots than people.
Yeah, let's have that conversation a second, because people are concerned about, as you said, dwindling populations. AI and robots have the potential to help support the GDP.
Yes.
Congratulations on Optimus 2 and soon Optimus 3. Your prediction on the number of robots by 2040, humanoid robots to be specific, what order of magnitude?
By 2040?
Yeah, so.
I think if you say like 2040, probably there are more humanoid robots than there are people.
So on the order of 10 billion, yeah.
Yes.
And your price point on these humanoid robots? You're pretty good on pricing. Sometimes you're off on timing.
Yeah, I'm often optimistic on timing, but although the press will report when I'm late, but not when I'm early. For example, our Shanghai factory, we thought it would take about a year and a half, and we did it in 11 months. Our Nevada factory, we thought 2 years, we did it in 18 months.
Or the Colossus cluster.
Texas factory, 2 years, we did it in 14 months. So I've been early actually many times. It's just not reported. So when I make a prediction, I try to figure out. I try to say what is the 50th percentile likely, which means that half the time I should be wrong. So I'm not sandbagging essentially. But I think that's once you get out to 2040, that's a long time from now. Over 25 years, there'll be at least 10 billion humanoid robots.
And price point?
Yeah, the price point will be, I think, quite low. Probably $25,000 for a robot that can do anything. We will be in a future, assuming we are on the good path of AI, I think we will be in a future of abundance. Obviously you wrote a book called Abundance, so I think you would agree that that is probably the outcome. Basically anyone will be able to have any goods and services they want. The actual marginal cost of goods and services will be extremely low in the future.
In our last 4 minutes, let me change the subject to something near and dear to both of our hearts. Congratulations on Starship. It was literally awesome. Probably the engineering feat of this decade, if not more.
Not bad for humans. Not bad for humans. We did that with no AI was involved in that whatsoever. So
amazing.
I'm glad to say that we were able to do that entirely with human brains and without AI. I think in the future the AI might look at that and say, not bad for a bunch of monkeys.
When are we on Mars? When is Starship on Mars?
I think we'll be able to launch some Starships to Mars in 2 years. So at the next Mars window, which is in about 26, 27 months. We're just about to start, or we're at the beginning of a Mars transit window now, and they occur every 26 months. So just over 2 years, we'll be sending our first uncrewed Starships to Mars. And then if those work out well, and we don't increment the crater count on Mars, then we'll send humans 2 years after that.
So a challenge to be on the surface of Mars before the end of the decade sounds like a reasonable proclamation for either,
I think so.
for either side of the White House, hopefully.
Yeah.
I will go
I feel
there.
more optimistic about it with a Trump White House than a non-Trump White House, because the biggest impediment to progress that we're experiencing is regulatory, is overregulation.
Got to keep those whales and sharks safe. Yeah.
Yeah, exactly. It just takes us. I mean, it takes longer to get the permit to launch than to build a giant rocket, and the bureaucracy in the U.S. has been growing every year and has particularly grown under the Biden administration. And unless we do something to scale back the overregulation, I call it sort of, America is getting, and a lot of countries are getting slow strangulation from overregulation. And unless something is done to push back on that, it'll eventually become illegal to do almost any large project, and we won't be able to get to Mars.
Last subject, congrats on the cybercab rollout. Pretty extraordinary. Kathy Woods predicted it to be, multiple trillions of dollars of potential GDP growth and impact. Give us some predictions on when we'll see cybercab, when we'll be ordering a cybercab.
Yeah, well, Tesla, unsupervised full self-driving, we expect to be working in the US next year with the Model 3 and Y. So you don't have to wait for the robo-taxi or Cybercab to for Tesla to release autonomy. We're currently expecting to exceed human safety levels in Q2 next year, and then substantially go beyond that thereafter. And so really it's just a software update to the cars to be able to launch our self-driving network. So we expect to do unsupervised full self-driving and start that in California and Texas, around the middle of next year. And then, we have 7 million cars on the road. We'll have 9.5 million cars by the end of next year. So, and eventually we'll have a fleet of 100 million plus vehicles, and they'll all be autonomous. The Cybercab with no steering wheel or pedals, we're expecting to reach volume production in 2026. So that's certainly interesting. But like I said, the actual launch of a robotic taxi, unsupervised full self-driving, is actually next year. And at the event, the Tesla Autonomy event, we had 50 cars, 30 Model Ys that were driverless, and 20 of the Cybercabs. And so autonomy is here, is what I'm saying. And yeah, and all cars will drive themselves. This is a no-brainer. And they'll get to where they're 10 times safer than human-driven cars, which will save, past 1 million lives a year globally. And then Optimus starts limited production next year, 2025, and then should be in volume production in 26. And then we'll grow to, I think, ultimately be the biggest product of any kind ever. So, and I kind of agree with ARK Invest and Kathy Wood that autonomy, like the sort of robotic taxis, makes Tesla kind of like about a $5 trillion company. The Optimus robot, I think, makes Tesla a $25 trillion company. It's not even clear what money means in the future.
We end up in a post-capitalist society at some point. Elon, you make
it. We do sort of end up. It does become kind of post-capitalist. And like I said, and I know you agree with this, that we're, and looking at the most likely bright side, we're headed for an age of abundance where anyone can have any goods and services they want. It won't be a case of universal basic income. It'll be a case of universal high income is the most likely outcome.
You make it look easy, my friend. Thank you for making some time available. I know it isn't easy. Let's give it up for Elon Musk, everybody.
Thanks, Peter.
Thank you, my friend. All right. A glimpse into the future across multiple industries. It's a pleasure, Your Excellencies, ladies and gentlemen, to share with you an initiative that came out of FII. It's called the AI Inclusive Initiative, and it's the first important step and endeavor in uplifting the emerging markets through the power of artificial intelligence. The key objectives of this initiative, the AI Inclusive, will support the development of safe and responsible AI ecosystems within the Global South. So how is FII going to achieve this? Number one, by identifying AI startups that provide positive solutions and concrete impact on humanity. Second, by securing initially investments of $100,000 each from at least 50 private sector stakeholders to back these startups. Third, by working with knowledge partners to make sure local talent is equipped with the skills needed to thrive in the AI landscape. Fourth, by collaborating with tech companies to offer training and scalability and fostering innovation and growth. And finally, but not least, FI Institute will advocate for governments to provide tax benefits to investors, creating AI-friendly conditions for them. So the impact here, the goal is to help initiate a safe and responsible AI ecosystem within emerging markets. This offer is initial support for AI startups to empower them to drive positive change. Today, the FI has a call to action for all of you to join us in this important AI empowerment journey. This is an opportunity for many of us to support this movement, whether it is through financial contributions, capacity building, or provision of tech solutions. AI has the ability to create a brighter and more inclusive future for all. All right, that is our AI initiative. And now it's a pleasure to welcome to the stage our panel, our Board of Change Makers AI. If I could please have our panelists come out. Very unenviable task of doing this in 40 minutes when each of you deserve 2 hours on your own. I'm going to take notes from the conversation this morning and go for each of you, and wish me luck, please. Travis, I'm going to start with you. Founder of Uber, CEO of Cloud Kitchens. We talk about AI a lot, and all about the super fancy, big, billion-person transformations. How is AI going to change business right now and transform and expand and change profitability of businesses? You're doing some amazing things with Cloud Kitchen and AI, please.
Those are two different questions. When I look generally at what's going on right now, it feels like we're entering an era of bigger is better. That if you are a large company with a strong business model, that the technology that's coming is actually going to give you competitive advantage over folks that are smaller. Like the accretion of value is going to the bigger players. And there are probably a lot of very simple things that can be done to create more profit and bigger moat on those business models, is my guess. So there's just like blocking and tackling, like workflows, customer support, onboarding, sales, all getting automated will make an already strong business model like supercharged. And I think for the biggest companies create trillions of dollars of value. We're doing, my company's doing the future of food. It's real estate, software, and robotics for food. And there's lots of fun, practical things that are happening. They're going to be big, but they're also practical. We have a machine that makes food. Like imagine if you were to go to Chipotle, that front line of people that is making your bowl. We have a machine that does that. So we have restaurants that are operating with no people or one person just overseeing the machine. But if there's only one person in that room, we now have that person talking to the machine about how the machine is doing.
As if they were an employee.
So yes. So then this is simple stuff, but this is where we're going now. Like we have this up and running in restaurants today, where you're asking the robot, hey, is the food warm? Am I running out? This kind of thing. But we just said, well, might as well just give it a personality. So now you can ask, like, did the Dodgers beat the Yankees today? Which they did. And you can have a conversation. And it's sort of, we're quickly getting into that interstellar moment where you're just interacting in a very human way.
I've got to ask this other question just for fun. If you'd remained CEO of Uber, or were still CEO, what would you have done differently? What would Uber be doing now?
Oh man, we could take the whole hour on this one. I'll keep that one short. Maybe I'll give you a couple things. Look, we had probably one of the preeminent AI labs when I left Uber. And we saw the seminal paper out of Google, the attention paper. I mean, you guys know how I rolled when I was doing Uber. Like, we'd probably be doing some pretty interesting stuff on that front. I mean, sort of in a more practical, on the more practical side, like, we were starting to roll out, I mean, of course, we're doing the autonomy thing. I'll put that aside. I think Elon's going to take care of that at this point. But we were starting to roll out we looked at transportation as a high-frequency trading business where we would buy trips from drivers and sell it to riders. We were a market maker. And so we were starting to set up quant teams for each city to do the high-frequency trading of the trips so that we could get the lowest cost reliable ride more efficient, gain market share, get more profits, all of this. It was just kind of a fun, geeky finance thing. But.
One in 30 seconds. You've disrupted two huge markets. Your one piece of advice for someone here who wants to go disrupt a marketplace today, what's your piece of advice for them?
Look, over time I've tried to distill what it means to innovate at speed and at scale into sort of principles or pillars. They basically are cultural values at my company, and so we've distilled it down to truth, trust, and passion. And again, those are high-level sort of ideas, but doing those really well, each of those really well, is sort of how you innovate at speed and at scale. And it's, there's a lot in there, but like think of the childlike playfulness and curiosity with a teenage rebelliousness with an old man's wisdom.
That's a beautiful mindset setup. Thank you.
Yeah.
Thank you, Travis. Jack Hittery, my dear friend, one of our trustees, CEO of Sandbox AQ. You have your chairman sitting right next to you.
No pressure.
No pressure, whatever. So first of all, please explain AQ, but then what are large quantitative models and what role do you envision they'll play in the current evolution of AI?
Well, Peter, first of all, I'm very happy to see that we still have humans on the panel instead of just AIs.
For the moment.
So I think it's just another few...
I mixed the AI in this panel, yes.
Okay. Another few FIIs, it's just going to be avatars up here. The mantra of AI or die is real. Is real. It's not just a phrase. It's happening right now. It's happening on several levels. And certainly companies and countries that do not engage will die. But now the question is, okay, let's say we all agree on that. Which AI? What AI? What kind of AI? What mix of AI? And the marketplace now is starting to offer more than just one slice of AI. And that's what's exciting. So we have, of course, large language models. Many people in this room and on this panel are involved in that and making huge strides. And we're seeing AI now take on reasoning, and I'm sure Eric and others will also address that. But there's a whole nother side of AI that has had less focus. And that's quantitative AI. That's AI that's based on equations and data, quantitative data, numerical data. When we think about starting a biopharma industry in a country that never had a biopharma industry, that was really not even possible 5 or 10 years ago. But now we can come to a country like KSA or other countries and say, hey, let's get that going. But it's not large language models that will win the day there. It's models that have been trained on biology, physics, chemistry, electrons, that kind of interaction. So large quantitative models, LQMs, as complementary to LLMs, allow us to do that at scale and speed. And we do that on the same GPUs, we have NVIDIA here on the panel, that LLMs use, but we tweak them in a very, very different way. We train it on a very, very different kind of data. The data doesn't come from the internet. The data does not come from downloading Wikipedia and Reddit and social media. Instead, we generate the data from the actual equations that govern our world. And this is now a whole new superpower for humans that we just never had before as a species. Until 3 years ago, it was not possible to calculate
data to train these. So how should leaders think about the proprietary data generation they have and retention as AI models become more commoditized?
Well, Peter, we all talked about Gen AI. Gen AI is a very real and big thing. But now let's talk about gen data, generative data. How do you generate data? Well, when you want big data sets that govern our world of either quantitative finance to look at portfolio optimization, or again, a new material to build a car that would be lightweight, make the car lighter weight so it's more fuel efficient, we can't turn to the internet for that data. That is not where we're going to get it. Instead, we generate the data from these equations. Those become interesting.
Heisenberg, Schrödinger.
Yeah, exactly. That's where quantum comes in. When people hear the word quantum, I know people get scared, sorry, but quantum is not just about quantum computers. It's about today on GPUs from Alphabet, TPU from Alphabet, GPU from NVIDIA, and others. There's many others coming out. We're able to run the quantum equations, that is the equations that actually govern our world, at scale on these GPUs and TPUs. This is new. These chips, by the way, were never designed to do this in the first place. Amazing. And it's the human ingenuity that is quite fascinating that came up with this.
You know, you did an incredible job spinning Sandbox AQ. A is for AI, Q is for quantum, just for you remember that, out of X at Google. And you have real products today. Can you just very quickly give us a sense of what Sandbox's products are that you're
Sure, I'll give some actual real case studies. Here at FII, we have, I think, Paul Hudson, the CEO of Sanofi, one of the largest pharma companies in the world, and our two companies actually are announcing just today, we were just on CNBC earlier, announcing that we're working together to apply this AQ, apply this LQM, this quantitative AI, to accelerating biomarker development, that is development of diagnostics that will help all of us, and drugs as well. So that's a real world case study of how we're using it there. We're also working with companies like Dow and others on the chemical side to say, how do we get new catalysts that could bring us new materials? When we think about the hydrocarbon space, think about the output of a refinery. And we say, okay, the high octane fuels, very profitable, jet fuels, kerosene, profitable, naphtha. But how about the bottom of the stack, Peter? That bottom of the stack, petroleum companies don't make much money on. It's sold to smelters and others and burned in the air. And so when we think about what we can do with AI that understands chemistry, we can now take the bottom of the refinery stack, up-value it to things like carbon composites. Carbon composites are what make a McLaren car so powerful and yet so light, Aston Martin, Ferrari, and others. But it's not accessible technology to all cars. By working with the hydrocarbon producers, we can say, how do we now make this kind of technology available on a democratized basis? So these are real world impacts, be it in biopharma, in chemicals, in fuel, in energy. And Elon was talking about energy and energy storage. The battery technology we have today, Peter, is 45 years old. Amazing. And we need to leapfrog that. And this kind of AI, complementing LLMs, this is where it's going to come from.
Let's go to your chairman next.
Can we thank Ruth for spinning Sandbox out?
Thank you, Ruth.
Good job, Ruth.
And what a financial success so far.
Absolutely.
It's been amazing. I've never seen a company
Very
scale
excited
revenues
to see the
as quickly
upside.
as you have. It's extraordinary. Dr. Eric Schmidt, former CEO and chairman of Google and Alphabet. There's nobody on the planet that I think holds your stature in this field. Thank you for all that you've done. The path to AGI. We talk about AGI, it's this blurry line of what is AGI. So do you have a definition for it? And why is it so exciting? Why is, Sam saying, I'll spend $50 billion, whatever it will take? Talk about that, please.
It's worth understanding what will happen in the next 5 years.
Please.
And the work that these guys highlighted and others on the panel will highlight are going to generate savants, that is, specialized assistants that will work with you in whatever you do. An artist savant, a music savant, a physics savant, and so forth. Those savants will work with you to do research, drug discovery, solve problems, can do many, many things. Why 5 years? Because today we have all the components necessary. We have planning, We have the ability to do forward and backward reasoning. We can do stepwise reasoning. We can go against objective functions that are much more complicated than they used to before, and we can generate arbitrary code. In the industry, it is believed that somewhere around 5 years, no one knows exactly, the systems will begin to be able to write their own code. That is, they literally will take their code and make it better. And of course, that's recursive. I thought that is essentially a change in slope. If you're going like this, all of a sudden it goes like that. It's reasonable to expect that within 6 to 8 years from now, so 2030 right after that, maybe 2032, the current growth rate, it will be possible to have a single system that is 80 or 90% of the ability of the expert in every field. So 90% of a physicist, 90% of the best physicist, 90% of the best chemist, 90% of the best artist. When you have such a thing, you have a non-human that is effectively smarter than any human, because no human can dominate all of those fields. Maybe Leonardo da Vinci could, but certainly not now. We don't know what happens when such a thing exists, but we know that that race is really important. There are many, many things that this thing, we don't know what to call it except an AGI, could do. For example, it could analyze cyber threats and develop new ones, or it could protect against them. It could come up with new biological solutions, good ones or bad ones. So there's both a national security component and a worry, but also a notion of a huge step change in human efficiency and productivity. I will assert that we as humans are not ready for the arrival of this. Yeah. We're just not ready for it.
Yeah, I can imagine all future Nobel Prizes in math, physics, chemistry, medicine coming from AI systems.
Yeah, and I should say, by the way, that if you go to Formula One, you enjoy watching the humans drive around the track. Yeah. Now, it's obvious that automated cars, Waymo cars and so forth, could drive faster, but we wouldn't find that an interesting sport. Yeah. So here we are in the land of golf. Maybe there will be a robotic golfer that will beat all the live top golfers, but we won't look at the robot, we'll look at the humans. So we poor humans will take pity on ourselves.
We're very biased, aren't we?
Right. That will be how we choose to entertain ourselves.
Very briefly, but this takes an hour worth of conversation. What do you consider the most dangerous outcome around AGI or artificial superintelligence?
There's a huge issue around proliferation. And right now, we don't fully understand the rate of proliferation of the mid-tier models and open source models. There's a consensus at the moment that models that cost less than $100 million to train are probably not that dangerous, and ones that cost more than $100 million are more dangerous. I have no idea why we believe that, but that's the number. So what will happen is, at some point, there will be proliferation of inexpensive tools that can do significant damage. The most obvious one is in biology.
Yeah. Thank you.
Something you know a lot about.
And I do think that we're going to see extension of the human health span because of AI.
We live longer, but it'll be more dangerous in some situations.
Hopefully we can moderate that. Ruth, a pleasure. Ruth is the president and CIO of Alphabet and Google. You met her this morning. Ruth, I want to quote this and then ask you about it. We've all witnessed companies making grand AI for good pronouncements, for sure. But when push comes to shove and financial performance dictates decision-making, often less lofty ideals are what shareholders demand. So how do you think, I think the world of Google. I think Google has transformed the world in extraordinary ways. How do you think of AI for good versus AI for financial gain in the position you're in Google as a company?
I think of it as a false choice because the upside from AI is absolutely extraordinary. But if we don't invest to protect on the downside, we'll never have the opportunity to actually invest to capture the upside. And that upside-downside point is two sides of the same coin. So when you think about the upside, it's around accelerating science. It's around social issues, solving things in education, healthcare, as we've been talking about. It's the economic upside. But if there's not a responsible foundation, if we're not doing the heavy work, we don't have a right to have a seat at that table. And that means engaging with regulators constructively. It means investing in our systems internally so that you're protecting from the downside. If you don't protect on the downside, you're going to find resistance, whether it's from the regulatory world or from everybody else. And so they go hand in hand. And to assume that you can pursue one without the guardrails that are critical, I don't think is long-term sustainable. And so we view them as two interlinked approaches to really maximizing the upside of this extraordinary technology.
You know, you've managed through a multitude of ups and downs in the economy, including the 2008 financial crisis. What's important for business leaders here to know about leading their teams through the incredible changes we're about to see? And do you think people realize how much change we're about to see in business and industries and society over the next 5 years?
I think the most important point to take away from all these conversations is that the art of the possible is fundamentally changed. This is a generational opportunity like we haven't seen before. And I spoke about some of the key proof points in the earlier discussion this morning. Probably one really important one is in life science. I'm so proud of our colleagues who won the Nobel Prize for this, with AlphaFold credited with being the most important contribution to drug discovery. Relevant to your question, Demis Hassabis, the founder of DeepMind, the one who went on this journey to create AlphaFold, when he embarked on it, he said, many people said, how is this possible? And his answer was, why not? And so we kept going. And I think the other really important point when you think about this, that I talked about some of the language translation work we're doing. We now translate in 260 languages. The important point is that we added 110 languages in the last 6 months alone. 500 million people on the planet. So it's a vertical lift. What that says is you better not delay. You better move right away. It's already been said on this panel. I 100% agree. And the economic upside is profound. So I would say the two most important, there are many important messages, but one of them is the time is now. You have to reimagine what is possible, because it really is. And we're seeing it already today. We're seeing it in the manufacturing sector. We're seeing it in education. We're seeing it in so many different areas. In fact, very importantly, on this point about language translation, I was recently with the Minister of Digital Transformation, a country in West Africa, who said more than 50% of their population is under the age of 19. They knew that the most important thing they could do, and we've already heard comments about education today, the most important thing to do is education. How can you have a country with more than 50% under the age of 19 and not solve that? But they didn't have the teachers to do so. And what's exciting with AI is they can now actually provide education, quality education to their entire population. And very importantly, in many countries, as in this one, in many of our countries, multiple languages are spoken. And before AI Translate, you had to learn French or English in order to get the math books. Now you can learn it in your language. And so to me, when you think about the impact on humanity, it is incredibly inspiring. My dad always said when I was growing up, education is your passport for freedom. It is your passport for life. This is transformative. So one, get on the program right away. And the second really important point is what Demis said, which is, why not? You have to radically reimagine what is possible, how you interact with customers, every element of process, risk management, the way to solve healthcare issues, education issues, climate change issues. But the time is now.
It's incredible. And it's near infinite opportunity, isn't it?
Absolutely.
Every industry will be transformed.
Reimagine the impossible. Reimagine the possible. Yeah.
Thank you. Thank you. Ben Horowitz, co-founder and general partner of A16Z. Man, oh man, you guys have been on fire in the AI universe. So I'd love to hear your thinking as a leading thought investor. Where's the value going to accrue in this incredible value chain from chips and power and real estate and large models and applications? Are they all equally important to invest in?
Yeah, so I think, as people have been saying, it's such a gigantic market. It's the biggest market we've ever seen, that there's going to be kind of money to be made everywhere. I think the issues and challenges are different at the different layers. So if you look at the kind of hardware infrastructure side, chips and data centers and power, there's no question in 10 years we're going to need more of all that. Like there's no doubt at all. But the thing about that is, okay, how does that progress, and how do you finance it? So if you look back to the internet, which you recall, we had the biggest bandwidth shortage in the world in 1999 and the biggest bandwidth glut ever in 2001.
Akamai was charging whatever they wanted to back then.
Yeah, it was the most bananas thing. And how could you possibly have too much bandwidth in 2001? It didn't make sense, right, if you look back historically. But what happened is the bottleneck moved. So the bottleneck was bandwidth in 1999, but then it became, how fast could the server spit out the bits? Did we have load balancers that were good enough? These kinds of things. And then we didn't need the bandwidth because we were stuck in other places. And already we've seen kind of the price of NVIDIA chips this year drop in half. And you go, whoa, how is that happening? Well, we have this data bottleneck that's kind of becoming a sort of serious thing. And then we're gonna have a power bottleneck clearly and other kinds of things. And then we'll have a cooling bottleneck. And so if you're financed with NVIDIA profits, then you're probably good. But if you're financing a data center with a lot of debt, you could lose it. You could get upside down very fast. So you have to really be thoughtful about that. Then if you go to the next layer, the kind of foundation models, what we call the state-of-the-art models, Anthropic, OpenAI, Gemini, Llama. That's that's 80% of the software market. Everybody has to use it for infrastructure, so every application, everything calls on it. I'll bet Travis has it as part of his infrastructure, there's no question. So that's just a big and very fast-growing market. But it's really interesting in that the price of a token has fallen 100-fold in the last 2 years.
The most powerful technology in the world is almost free.
Yes, it's almost free. Like the prices are dropping like crazy, but revenue's still increasing. So the size of the market is huge, and the price competition is really intense, like much more intense than you would see in this complex of technology at this stage normally. And then we're we're asymptoting in certain places. So if you look at the growth of GPT-2 to GPT 3.5 versus the growth, in terms of intelligence of 3.5 to 4, 2 to 3.5 is much larger, even though we spent way more money going 3.5 to 4. That's because we're hitting a bottle. It's not the end of it. It's not going to asymptote forever, but it does imply that there's going to be an architectural change. And so even though the revenue is so huge in this market, there could be new players that emerge. We could be search before Google when we had 37 search engines, and none of them were Google. And we can't even remember who any of them were now, because they don't matter. So that's the kind of trickiness there. And then in the application layer, Travis hit on a really interesting thing, which is big companies can optimize very fast with AI. And so as a new company, you have to ask the question, in a new application, can I get to market faster than the big company can get a good product? And we made an investment in a dev tool company, which is like the slowest growing stuff ever because you're selling to engineers, and engineers hate buying stuff because they can build it, of course. And this thing has grown from 0 to 40 million in revenue in 3 months. Now, 3 years would have broken the world record for a frickin' dev tool. But so they're going to take the whole market before anybody can build anything as good as they have. And so that's certainly possible. And then the other thing that's been very interesting...
I'm going to ask you to wrap up on that.
Oh, yes, sorry. I had too much to say.
Ben and I want to hear it, believe me.
Yeah, sorry.
But thank you. Shog, as CEO of TikTok, it's a pleasure to have you here. How is TikTok utilizing AI to contribute to the creative economy? I think, and what's the positive impact for the global economy as part of that?
So our recommendation algorithm has always been based on machine learning. So it's something we've embraced for a number of years. But what I think has been unlocked, by mainly OpenAI in the last couple of years is this better understanding that, the opportunities are actually much bigger and coming faster than we thought possible. For us, you know, a lot of it is translating this amazing technology. First of all, we need to understand it. And understanding it I think, you know, involves with myself. I mean, I find it hard to catch up. There's so much going on. I think a lot of it is using it myself. You know, I read a lot of reports. X number of things can be done, Y number of things can be done. But when I use it myself, you know, I just like download the products or sign up for it and use it myself. I get a better understanding of exactly what is possible at this moment in time. For things that goes on in many other parts of the business that, you know, we are exploring what is possible and not at this moment in time.
You know, we talked about AI safety. A lot of kids are using TikTok. My family's using TikTok. How do you think about making sure that you've got measures in place for the responsible use of AI?
Yes, it's very important, you know, particularly, well, I guess in the US, there's an election cycle, you know, going on at this moment in time. It's a particularly important problem for us to get on top of. So I think the first thing is your policies. You know, the guidelines of what you allow on your platform needs to be very explicit. So today, if you do anything deceptive using AI, impersonation or anything dangerous, it violates the guidelines and we will take it down. The second is we provide a series of tools for people to automatically label. So if you produce something that's done by AI, that's produced by AI, we will ask you to label that. And if you don't label that, we will take measures, you know, to make sure that you don't get the reach that you want.
Do you use AI to do that, I assume?
The third thing is to use AI to better for content moderation. And there are many opportunities for this. Initially, I didn't really understand it. It was a very fuzzy concept. You know, large language models can do better content moderation, but how? You know, but you know, with better understanding, there really is a very significant path for a lot of this new technology to help content moderation be better. So using technology to help protect against.
It's interesting to what Eric said earlier. You know, if TikTok was populated by videos only created by AI, it'd be a lot less interesting. It's the fact that humans are doing it with the support of AI that makes it fascinating.
It is currently true, and I tend to agree with Eric on many things because he's a lot smarter than I am. We are seeing some, for example, OpenAI has been posting Sora videos on our platform. I've been following them. Some of them are becoming really interesting.
Yeah.
And you can see a path where at some point, one of them could go viral. And one of them could be so interesting that people feel like it engages them. It is possible.
Thank you. Jay Puri, EVP worldwide of NVIDIA. You know, NVIDIA has become synonymous with the AI revolution that we're living in. Thank God for those early video game players, huh? How should companies and countries think about AI to drive growth and prosperity? We have a number of countries and leaders represented here, and what do you advise them to do right now? Because it's going to be fundamental to their existence, to their future economies. You agree?
Absolutely. Yeah, I mean, AI is basically about creating intelligence. So how can something about creating intelligence not be fundamental to the economy? And you know, and the other thing, of course, is the pace at which AI is advancing is frankly just unbelievable. There's just no expletives that you can use to describe that. I mean, just 2 years ago, we had...
I call it all new stock price highs.
What's that?
Exponential growth in NVIDIA stock.
Exponential growth, right? So only 2 years ago, we had ChatGPT and generative AI, and we were very impressed with the fact that you could get next token prediction and it would answer. And now today, as everybody is talking, the AIs are becoming very sophisticated and able to reason and reflect. And in fact, they don't just do one-shot reasoning. They can reason a lot and solve very complex problems. And it's the agentic AI. And then the way you interface with them is not necessarily a chatbot, but you can have human avatars. So, we are going to have to learn how to live with digital humans as teammates, if you will. And then, going forward, we are moving into things like physical AI, where, of course, Elon talked about robots and humanoid robots, but all kinds of robots, even factories and warehouses and everything will be robots that will be built into the digital world. And they will all obey the laws of physics and so on. You will not be able to tell the difference between the digital and the physical, and you will use AI to optimize everything in the digital world, and then you will implement it in the physical world, and then it's kind of the AI flywheel, because whatever you do in the physical world then provides data to improve what happens in the digital world and so on. So what I'm saying is, with this type of what's going on, what is it, to your point, what is the condition that you have to create for you to be successful in using AI, whether you're a company or you're a country? And the condition is, of course, AI is about taking the information that is embedded in the data that is there, right? That's where the intelligence is embedded, and AI allows you to discover that using these sophisticated models and everything I'm talking about. So to be able to do that, what everybody needs to do right away is to build the instrument to allow you to do that. And that is what we call the AI factory, okay? An AI factory is custom built to take raw data, process it into generative models and so on, and then allows you to produce these monetizable tokens at scale, right? And so these factories, once you build them, can change everything. But they're not easy to build. As Elon was saying, it's extremely difficult to build these AI factories. And I think one of the things that we at NVIDIA have been doing, of course, we have been involved with every one of these factories that has been built. So we have tried to make it as simple and straightforward as one can make them by taking all the learnings that we've had, codify them into reference architectures and so forth, and see how quickly and replicate these factories, right? And
let me ask you a closing question here. The GPUs that NVIDIA has been producing, there are many companies chasing you, no one at the scale. How long do we see the GPU as the dominant architecture in AI, do you imagine? Is it the rest of this decade?
Well, I think one of the things that people miss is NVIDIA is not just about the GPU. We are about an accelerated computing platform.
So what does accelerated computing mean to you?
Okay, so what accelerated computing is not about just, it is, we need to, general purpose computing, which is what we've relied on for a long time, sort of was using Moore's law, and it kept advancing, say, twice as fast, say every year or so. But that type of advancement in computing, even if that was to go on, and Moore's law is not happening anymore, in 10 years, you'd only be able to advance computing by 100 times. To do AI, we have advanced computing for a particular domain by using GPUs by 1,000,000 times. That's the reason why deep learning is possible and the types of models that we are doing. And to do that, you have to innovate across the whole stack, not just at the GPU, but all the software, refactoring it, parallelizing it, looking at the unit of computing as not a server, but a data center and so forth. So, that's what we are it's not about a particular chip. It's about an accelerated computing platform that you can be true to, which is based on CUDA, and people can continue to innovate in AI, whether they're building models or they're doing inferencing or whatever, and they can be sure that there is backwards and forward compatibility. And it's very much more than about a chip. And so I think that's what we're focused on, and that's what we hope to continue doing for the long term.
Ladies and gentlemen, 6 minutes per person is nowhere near enough. Thank you all for your patience and for your wisdom. Grateful. Let's give it up for our panel here.
Well done. That's great.
Thank you. Thank you very much, Peter, for this great session. And thank you for this great conversation with Elon. So, thank you all for being here with us today. It was a long day, but I hope a very productive day. Tomorrow, we're expecting also great conversations. We'll start at 8:45 a.m. because it will be, again, a long day. We'll hear from great people, including His Excellency, Minister of Finance of the Kingdom of Saudi Arabia, His Excellency Mohammed Al-Jadaan. We'll have many series talking about supply chain, talking about many other industries. And we will hear also from the Prime Minister of Vietnam and many more conversation, conclaves. And please, I know many of you were here today and you spent almost the whole day in this room, but I will encourage you also to discover the dome, to discover the pavilion. You have a lot of other great sessions there. And enjoy your evening. We don't want to keep you too busy. And we hope that you will be back with us tomorrow morning. Great session starting quite early, but very, very interesting. Have a great evening. Thank you.